Hey, good morning everyone. So in our last class, we completed registration under GST and even MCQs related to that we have completed, and we have some descriptive questions. Have a look into that in page number 164 of your practice manual. Page number 164. In order to be eligible for grant of registration, a person must have a permanent account number issued under Income Tax Act. State one exception to it. Generally, we need permanent account number because the GSTIN is based on permanent account number. But we have one exception. That is in case of NRTP. So they will not have permanent account number. So based on their passport, so they will get the application for, they can make the application for registration. So therefore, one exception to this is NRTP. Non-resident taxable person. So he has to submit a self-attested copy of his valid passport. Then next, but there should be an authorized signatory for that person. Or that NRTP, one authorized signatory should be there, and that authorized signatory should be an Indian resident having a valid permanent account number. Then state which of the following suppliers are liable to be registered. Agent supplying taxable goods on behalf of some other taxable person and its aggregate turnover does not exceed the applicable threshold limit during a financial year. Whether an agent who is making supply on behalf of principal is compulsorily required to get registered? Yes, so they are required to get registered irrespective of their threshold limit. B, an agriculturist who is only engaged in supply of produce out of cultivation of land. So they are exempted from registration. Whatever may be their aggregate turnover, they are exempted from registration, they are not required to register. Question number 3, Pure Oils, Delhi has supplied machine oil and high speed diesel. Machine oil is actually taxable, high speed diesel is non-taxable. In the month of April, as per the details given in table below, Pure Oils is not yet registered. Supply of machine oil in Delhi, so whether it should be taken in aggregate turnover? Yes. High speed diesel oil? Yes. Because aggregate turnover includes all supplies, taxable as well as exempted, non-taxable, everything. Supply of machine oil made in Punjab by Pure Oils from its branch located in Punjab. So their aggregate turnover is 35 lakhs, and so they are located in Delhi as well as in Punjab. So Delhi and Punjab, so one of the state is not special category state, and none of the state is in MMTN use stamp, and they are exclusively engaged in supply of goods. So due to that reason, the applicable limit for them will be 40 lakhs. And in this case, their turnover is 35 lakhs, and as it does not exceed 40 lakhs, they are not liable to be registered. Then, what will your answer if the question above in serial number 2, Pure Oil supplies high speed diesel in Delhi in capacity of an agent of mixed oils. Suppose if they are supplying as an agent, then agent making supply on behalf of principal is compulsorily required to get registered. So then, next one, what are the advantages of taking registration? So this is a general question. So that is, they will be legally recognized as a supplier, and proper accounting of taxes paid on inputs which can be utilized for payment of GST. So ITC is available. You remember, they will be called as legally recognized, and they can avail ITC. So ITC they can avail, and then they can collect the tax from the recipient. Only a registered person can collect the tax, an unregistered person cannot collect the tax. And they will be eligible to avail various other benefits and privileges. Actually, if you are a GST registered person, so this MSME loans and all easily we will get. So there are like micro, small and medium enterprise loans which are offered by the banks at a concessional rate of interest. So those loans we will be easily getting. So that is the advantage of getting registered. So 4 points you need to write. First, legally recognized, they can take ITC on their inward supplies, and they can collect GST from their customers and various other benefits and privileges. Can a person without GST registration collect GST and claim ITC? No. In section 16, one of the conditions for availment of ITC is that only a registered person can avail ITC. and even a registered person only can collect the tax. If a person is making taxable supply from different states with the same permanent account number, can he operate with a single registration? No. Different states, definitely he need to get registration in each state from where he is making taxable supplies. Can a person having multiple places of business in a state obtain separate registration for each place of business within a state? It is optional. So within the state, when they have multiple places of business, either they can get a single registration or separate registration with respect to each place of business. Then next, is there a provision for a person to get himself voluntarily registered though he may not be liable to pay GST? Yes, a person can voluntarily get registered under the GST law even if their aggregate turnover does not exceed threshold limit, and once they are registered they need to pay GST on their outward supplies. Can the department through proper officer suo motu proceed to register a person? This is in case when you are crossing the aggregate turnover but not registered. So department will come to know that you have crossed the aggregate turnover from your bank account. So bank accounts will be linked with permanent account number. So therefore randomly they will take the bank account details of various people, and the gross receipts exceeds 40 lakhs or 50 lakhs like that. So definitely they will be giving notice to us asking that your turnover has crossed this much, but why are you not registered? So this is suo motu getting registered by the proper officer. So yes, proper officer can do that. So who is liable to be registered? A person who is liable to be registered fails to obtain registration. When they are liable to be registered, maybe they are making compulsory registration cases, the tie creations, or their aggregate turnover exceeds the threshold limit like that, but they did not obtain registration. Then proper officer so may make, that is, this person to register in the manner as prescribed in the rules. Whether the registration granted to any person is permanent? Yes, until cancelled or surrendered, so the registration will be valid. Already we saw valid till cancellation. Is it necessary for the UN bodies to get registration under GST? So we discussed UN agencies like UNESCO, UNICEF, WHO, etc. Then embassies and consulates, they will be obtaining one number called as unique identification number, and this unique identification number does not mean that they are registered. It is just an identification number. What is the purpose of this unique identification number? These UN agencies, embassies and consulates, their outward supplies are actually exempted. On their inward supply, whatever GST they paid, they can get it as a refund. So to claim the refund of tax paid on notified supply of goods or service received by them, so they will be getting this unique identification number. What is the responsibility of taxable person making supplies to UN bodies? Suppose if I am making supply to UN bodies, I need to mention the UIN in the invoice. Just like how I mentioned GSTIN in the invoice, I need to mention UIN. So person making supply to them is expected to mention UIN on the invoices and treat these as B2B supplies or B2C supplies. B2B means it should be treated like supply to a registered person. What happens when the registration is obtained by means of willful misstatement, fraud or suppression of facts? So that is one of the reason for cancellation of registration. Total 5 cases proper officer can initiate cancellation of registration. In that one case is registration obtained by fraud. So in that case cancellation of registration will be there. Is there any option to take centralized registration for services under GST law? No. There is no centralized registration if you are doing business in multiple states. You need to get registered in each and every state. What could be the liabilities in so far as registration is concerned on transfer of business? So whenever there is a transfer of business, so the transferee should get a new registration and the transferor should make application for cancellation of registration. And even if you want, you can write that point about ITC also. So unutilized ITC can be transferred from transferor's electronic credit ledger to transferee's electronic credit ledger. At the time of registration, will the assessee have to declare all his place of business? Yes. Suppose within the state I have multiple places of business and I am going for a single registration. I need to show all my additional place of business in the registration certificate. Even post registration, suppose if I am opening up a new branch or a new office, so that place also should be added as additional place of business. Then state with brief reason whether the following supplier of goods are required to register under GST law. Mr. Raghav is engaged in wholesale cum retail trading of medicines in the state of Assam. For Assam, what is the limit? Assam, only Assam means single state. So limit will be 40 lakhs if they are engaged in supply of goods, because Assam is not in MMTN, Assam is not in U-stamp. So it is in other states. So only supply of goods 40 lakhs. His aggregate turnover during the financial year is 9 lakhs, which consists of 8 lakhs as intra and 1 lakh as inter. So they are making interstate supply of taxable goods. Taxable goods. So they are compulsorily required to get registered under section 24, even though they have not exceeded their threshold limit. Then Mr. S.N. Gupta of Rajasthan is engaged in trading of taxable goods on his own account and also acting as an agent of Mr. Rishi of Delhi. Agent making supply on behalf of principal is compulsorily required to get registered. Then question number 19, a very important question. Answer the following questions with respect to casual taxable person under CGST Act. Who is a casual taxable person? We need to write the meaning. A person who is entering into a state to make supply of goods or services and is not having any fixed place of business in that state is called as a casual taxable person. Can a casual taxable person opt for composition scheme? So in composition scheme we have some disqualifications. So in that, so S9 RCM. So are the disqualifications, so that we will see today. So C for casual taxable person. A person who is getting registered as a casual taxable person or a non-resident taxable person cannot opt for composition scheme. So they cannot opt for composition scheme in this case. When is the casual taxable person liable to be registered? So they need to make application for registration at least 5 days before commencement of business. What is the validity period of the registration certificate issued to casual taxable person? Number of days for which registration is granted or 90 days, whichever is earlier. Again, they can make an extension for a further period not exceeding 90 days. Only one time extension is possible. Can the validity of registration certificate issued to a casual taxable person be extended? Yes, it can be extended. If yes, what is the period of extension? So it can be extended for a further period not exceeding 90 days. Like that you write. Don't write 90 days. Further period not exceeding 90 days. Means suppose if they ask for 60 days, only 60 days will be given. Then next question is also important. Mr. Allen, a non-resident taxable person, wishes to provide taxable supply of goods. He has no fixed place of business or residence in India. He seeks your advice on the following aspects relating to CGST Act. When shall he apply for registration? Say at least 5 days, because CTP and NRTP should make application for registration at least 5 days before commencement of business. Is permanent account number mandatory for his registration? No. NRTP will make application by giving his passport, and an authorized signatory should be appointed. That authorized signatory permanent account number should be given. What is the period of validity of registration certificate granted to him? Same. So registration for a period specified in the registration certificate or 90 days, whichever is earlier. Will he be able to extend the validity of registration? Yes. And that will be for a further period not exceeding 90 days. Then next, this question has been asked in multiple attempts, MTPs and past exam also. That is about effective date of registration. What is the effective date of registration? If you make application for registration within 30 days from the date you are liable to get registered, the date on which you are liable to get registered is the effective date of registration. Say for example, today you are liable to get registered. You make application for registration within next 30 days. Then today will be taken as the effective date of registration. Suppose if you make application for registration beyond 30 days from the date you are liable to get registered, so only when you get the registration certificate, that date will be taken as the effective date of registration. So in this case, you see, situation number 1, the aggregate turnover of Madhu Limited engaged in taxable supply of services in the state of Punjab exceeds 20 lakhs on 25th August 2017. So what is the date on which they are liable to get registered? 25th August. On that day their aggregate turnover exceeds threshold limit and they are making supply of services. So supply of service means definitely 20 lakhs is the limit. And it applies for registration on 19th September 2017. Is it within 30 days from 25th August? Yes, it is within 30 days from 25th August. Therefore, as the application is made within 30 days, what will be taken as the effective date of registration? 25th August will be taken as the effective date of registration. Then, what will be your answer if in the above scenario, Madhu Limited submits the application for registration on 27th September. So they are liable to get registered on 25th August, but they make application for registration on 27th September 2017. Is it within 30 days or beyond 30 days? Beyond 30 days. And the registration is granted on 5th October. So beyond 30 days, which means that, so the date on which they get the registration certificate is the effective date of registration. What is the date on which they get the registration certificate? 5th October. So that 5th October will be taken as effective date of registration. First case 25th August, second case 5th October. Then determine with brief reasons whether the following statement is true or false. Registration under CGST Act can be cancelled by proper officer if voluntary registered person has not commenced within 3 months. No. What is the time limit within which they should commence a business if they voluntarily get registered? 6 months. If they are not commencing business within 6 months from the date they voluntarily get registered, in that case their registration will be cancelled. And so how department will know that they did not commence a business? Because these people will be filing nil returns. So when they are filing nil returns for continuous 6 months, then department will come to know that they are not doing the business, so their registration will be cancelled. Okay, if they are not filing returns, then again that is also a reason for cancellation of registration. Continue 6 months if you are not filing returns. So therefore, what is it we need to do? So in 1 month, we will book one invoice, fake invoice. Then next month we will give credit note. First month we will give invoice, for one invoice we will add, but then it is not a nil return. Next month we will give credit note for that invoice. So therefore invoice is cancelled. You understood? So therefore, it is like we commence the business. You understood or not? So 6 months period they can do that way also, so that their registration will not be cancelled, but that we should not write in exam. So in 6 months, so if within 6 months from the date when they get the registered voluntarily, if they are not commencing business, their registration will be cancelled. Question number 23, examine whether the supplier is liable to get registered in the following independent cases. So first one, Raghav of Assam is exclusively engaged in intra-state taxable supply of ready-made garments. So Assam means one state, only sale of goods. Assam, so only supply of goods. What is the limit? 40 lakhs. His turnover in the current financial year is 28 lakhs. He has another showroom in Tripura. No, then it is 2 states, Assam and Tripura. Assam and Tripura, but one of the state is a special category state and taxable supplies are made from the state. Therefore, the limit will be 10 lakhs, and here the aggregate turnover exceeds 10 lakhs, so they are required to get registered. So threshold limit is 10 lakhs. As it exceeds 10 lakhs, they need to register in Assam and Tripura. Okay, so it is 1.5 marks each per. They have asked. Then Pulkit of Panjim, Goa is exclusively engaged in intra-state taxable supply of shoes. His aggregate turnover in the current financial year is 22 lakhs. Only one state, Goa. Goa is in other states. Then the limit will be 40 lakhs because they are exclusively engaged in supply of goods. And their aggregate turnover is only 22 lakhs, which does not exceed 40 lakhs. So are they required to get registered or not required to get registered? Not liable to get registered. Then third, Harshit of Himachal Pradesh is exclusively engaged in intra-state supply of pan masala. Himachal Pradesh, even though other states and even though they are exclusively engaged in supply of goods, but as they are engaged in supply of pan masala, which is notified product, the higher limit of 40 lakhs will not be applicable. It will be only 20 lakhs. And as their aggregate turnover exceeds 20 lakhs, they need to register. So in this case 20 lakhs is the applicable limit and they need to register. So what are those notified goods? Pan masala, tobacco and tobacco products, ice cream, edible ice, bricks and roofing tiles. Then 4. Ankit of Assam is exclusively engaged in intra-state supply of taxable services. Services by default the limit will be 20 lakhs and his aggregate turnover in the current financial year is 25 lakhs. So it exceeds 20 lakhs. So therefore that person is required to get registered. So then 5th one is Sanchit of Assam is engaged in intrastate supply of both taxable goods and services. Then also the limit will be 20 lakhs. Because supply of both goods and services, the limit will be taken as 20 lakhs. His aggregate turnover is 30 lakhs. Therefore, they are required to get registered in Assam. That is the answer for that. Then question number 24. Mr. Siaram is a trader of decorative items in House Caste, Delhi. His aggregate turnover exceeds 40 lakhs in the month of October. He applied for registration on GST portal but missed to submit the details of his bank account. So his tax consultant advised him that prior submission of bank details is mandatory to obtain registration. Examine whether the advice of CRM's tax consultant is correct. No, we don't have to submit the bank details before making application for registration. So we can submit before or we can also submit, we may submit afterwards also. But if it is afterwards, there is a time limit within which we need to submit the bank details. What is the time limit? 45 days from the date we get the registration certificate or due date of filing first return, whichever is earlier. So that is the time limit by which they need to submit the bank details. Okay. Then next question number 25. BBD Private Limited of Gujarat exclusively manufactures and sells product Z which is exempt from GST. Wide notification issued under relevant GST law. So therefore they are making only exempted supplies, which means they are exempted from registration. The company sells Z only within Gujarat and is not registered under GST law. The turnover of the company in the previous year was 50 lakhs. The company expects the sales to grow by 10%. However, effective from 1/1, exemption available on Z was withdrawn by central government and GST at 5% was imposed. So therefore it became taxable on which date? 1/1/2020, means they are liable to get registered on 1/1/2020 because their turnover as on December is 42 lakhs. So therefore they need to get registered with effect from 1/1/2020. BBD Private Limited is of the opinion that it is not required to get registered. No, as they are aggregate turnover, they are doing business in Gujarat and they are engaged in sale of goods. The applicable threshold limit will be 40 lakhs. And so they crossed 40 lakhs in December, but they are required to register only when their outward supply become taxable. So it became taxable on 1/1. So as on 1/1 they are liable to get registered. And what is the time limit within which they need to make application for registration? Within 30 days from 1/1/2020 they need to make application for registration. So that is the answer for this. So BBD Private Limited needs to register within 30 days from 1/1/2020. Question number 26. Mr. Akash Malhotra of Gujarat often participate in the jewellery exhibition at trade fair in Delhi, which is organized every year in the month of February. Mr. Akash Malhotra applied for registration in January. So they are going to Delhi for participation in a trade fair. Means they don't have any fixed place of business in Delhi. So they applied for registration in January. The proper officer demanded advance deposit of tax equivalent to estimated tax liability of Akash Malhotra. You are required to examine whether any advance tax is to be paid by Akash Malhotra at the time of obtaining registration. Yes. So whenever a person is going to a state where he is not having any fixed place of business and is making supply of goods or services, he need to obtain registration in that state as a casual taxable person. At least 5 days before commencement of business, they need to make application for registration. Along with the application for registration, they need to deposit an advance tax with respect to their estimated net tax liability. Such advance tax deposited will be credited to their electronic cash ledger, which will be adjusted against their liability. That is this. And the registration granted to them will be valid for a period of 90 days or the number of days for which registration is granted, whichever is earlier, and they can extend for a further period of 90 days. So these are the points that we need to write. Then 27. explain the registration requirements under GST law in the following independent cases. Mr. Ahmad of Jammu engaged in business of supplying tobacco based pan masala. So for pan masala, always the limit will be, if they are exclusively engaged in supply of pan masala, the limit will be 20 lakhs. Even though Jammu and Kashmir, the limit is 40 lakhs if they are exclusively engaged in supply of goods. As they are engaged in supply of pan masala, the limit will be 20 lakhs and their aggregate turnover in this case is 24 lakhs which exceeded 20 lakhs. Therefore, they are required to get registered. Then, Mr. Lepcha of Mizoram is engaged in supply of papers with an aggregate turnover of 13 lakhs. Will your answer be different if Lepcha is located in Meghalaya? Mizoram is in MMTN, Manipur, Mizoram, Tripura, Nagaland. So the applicable limit will be 10 lakhs. And in this case, as their aggregate turnover exceed 10 lakhs, they are required to get registered. Will your answer be different if Lepcha is located in Meghalaya? Yes, in Meghalaya, the applicable limit will be 20 lakhs and they are not required to get registered. Then examine whether the liability to register compulsorily under section 24 in the independent cases. Hira, a supplier in Haryana, is exclusively engaged in supply of potatoes produced out of cultivation of land. So they are making only supply out of cultivation of land. Are they required to get registered? No. But they are making interstate supply also. Even then, section 23 overrides section 24. So as per section 23, they are not required to get registered and they are not required to get registered in this case. Then Anya of Telangana is exclusively engaged in intrastate supply of toys. Telangana, the limit is 20 lakhs. MMTN 10 lakhs. U-stamp. In U-stamp, T is Telangana. So the limit is 20 lakhs. So therefore, here in this case, the aggregate turnover is 22 lakhs. So it exceeds 20 lakhs. Therefore, they are required to get registered. Then 29. Q Limited is engaged exclusively in supply of taxable goods from the following states. The particulars of intrastate supply for the month of May are as follows. State Madhya Pradesh 5 lakhs, Gujarat 14 lakhs, Tripura 12 lakhs. They are doing business in multiple states and one of the state is a special category state. So therefore, the limit will be 10 lakhs. So and the aggregate turnover exceed 10 lakhs, therefore they are liable to get registered. Now, will your answer be different if Q Limited supplies only petrol and diesel in Tripura? Yes. If they are not making taxable supplies in MMTN, then the limit will be 20 lakhs, balancing figure. So in the first case, the limit will be 10 lakhs and they need to register. In the second case, the limit will be 20 lakhs. Why 20 lakhs? So because they are not making taxable supplies in special category states. Then why not 40 lakhs? Why 40 lakhs limit is not applicable? Because none of the states should be MMTN U-stamp. So here Tripura, they are making supplies. So therefore the limit of 40 lakhs is not applicable. But in this attempt, CA Institute has taken a wrong answer in the suggested answer. They gave the limit of 40 lakhs, but actually that's a mistake. So that's a mistake because they did not consider the notification. So it's a mistake and in that attempt, so they have taken 40 lakhs and gave marks also to the students based on only 40 lakhs if they have written. But actually that's a mistake and it will be taken as 20 lakhs. It should be taken as 20 lakhs. Okay. So then if suppose this question comes in exam this attempt, what we should write? You write it as 20 lakhs only, don't worry. Okay, you write it as 20 lakhs because now that ICI has launched one feedback form. So wherein suppose if in the suggested answer, if there are any mistakes etc., we can make a feedback to the ICI. So therefore accordingly immediately after the exam paper comes, so faculties like me, we are sending the suggested answers for ICI and even we upload it in YouTube also. This is the suggested answer like that. So therefore ICI will be aware of that. So definitely they will make that correction. Okay. So but the problem is, if the paper is already evaluated and in the suggested answer if this is coming, because nowadays suggested answer is coming 1 month before the exam, then in that case God only should help. You understood? So if the evaluation is done before preparing suggested answer, then we can't do anything. So because key will be based on suggested answer only. So that's where many students see, if you are failing in CA, it's not only because of your mistake. So that you please try to understand. It's partly your mistake, partly it is ICI mistake also. So because they have not brought this standardization in the evaluation, etc. and all. Because many students, when they share their answer sheets, I feel like they have written correctly. So it's not like my judgment is wrong. Same student, the same question would have been written by some other student, same way answer, but for that student they would have given marks. For this student they would have given correction, but they did not give marks. So this is that is a mistake, stupidity that is happening. Then, so therefore in this case, are they required to get registered or not liable to get registered? So liable, because 20 lakhs is taken, therefore it is liable to get registered, as the aggregate turnover 31 lakhs exceed the set threshold limit. So please make the correction accordingly, because the limit should be taken as 20 lakhs. Then question number 30. Mr. Q is a casual taxable person of Gujarat state, is a trader of taxable notified handicraft goods. It makes supplies to the state of Maharashtra, Rajasthan and Andhra Pradesh. Turnover for October 2021 is 18 lakhs. Explain the provisions of registration for casual taxable person under GST. Examine whether Q is liable for registration or not. So generally a casual taxable person is compulsorily required to get registered, but a casual taxable person engaged in supply of handicrafts is not compulsorily required to get registered. They need to register only when their aggregate turnover exceeds threshold limit. So in this case, so their threshold limit does not exceed, because it is only 18 lakhs. So due to that reason, they are not required to get registered. Okay. Then next one. So why are we not taking 40 lakhs as the threshold limit in this case? Why are we not taking 40 lakhs? Because they don't have the information that are they exclusively engaged in supply of goods. They said trader of taxable notified goods. Only when you see in the question exclusively engaged in supply of goods, so then only we will take. Okay. So that's why we did not take 40 lakhs. Suppose if we take an assumption, if they are exclusively engaged in supply of goods, then whether the higher threshold limit of 40 lakhs is applicable in Gujarat? Yes. What will be your answer if Mr. Q makes trading in taxable notified products instead of taxable notified handicraft goods, which involves 75% making on machine and 25% by hand. Handicrafts means 100% it should be made by hand. Then only it will be called as handicrafts. So here it is not handicrafts. In that case, they are compulsorily required to get registered, irrespective of the threshold limit. Then question 31. Mr. X of Haryana intends to start business of supply of building materials to various construction sites in Haryana. He has taken voluntary registration under GST in the month of April. However, he has not commenced business till December. When he took the registration? April. So April to December, so it is 6 months, more than 6 months. So due to lack of working capital, the proper officer suo motu cancelled the registration of Mr. X. You are required to examine whether the action taken by the proper officer is valid in law. Yes, that is, whenever a person voluntarily obtains registration and not commence business within 6 months from the date of registration, their registration can be cancelled by the proper officer. In this case, action taken by the proper officer is valid. Now, Mr. X has applied for revocation of cancellation after 40 days from the date of service of order of cancellation. Department contends that application for revocation can only be made within 30 days from the date of service of order of cancellation of registration. However, X contends that the period of submission of application may be extended. You are required to comment. So yes, so the revocation application can be made within 30 days from the date of cancellation of registration, and it can be extended for a further period of 30 days by additional joint commissioner if they approve, and it can be extended for a further period of 30 days by commissioner if they approve. So in this case, already 30 days is over. So now it is 40 days, extra 10 days. So in this case, can the person make application for revocation of cancellation of registration? Yes. but for that additional or joint commissioner should agree. Then that is this. So this actually came in May 22 RTP. Immediately they have asked in May 22 exam for 5 marks. Similarly, little bit changed in the question. So that's why I asked to refer the RTP of May 23. Maybe 1 or 2 questions could come from the RTP also. Then question number 32. What is the validity period of registration certificate issued to a casual taxable person? Already we discussed that. Does the cancellation of registration impose any tax obligation on the person whose registration is cancelled? This we discussed. So section 29 subsection 5, 18 subsection 4 read with 29 subsection 5. So whenever there is a cancellation of registration, before the date of cancellation, they need to reverse the ITC on inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, and even on capital goods, total ITC divided by 60 months into balance life. So that is not only in case when a person is going from normal scheme to composition scheme, not only the case where taxable supplies becomes exempted, even in case of cancellation of registration. Then 34, examine whether the supplier of goods is liable to get registered in the following independent cases. Rudra Builders of Rohini, Delhi is exclusively engaged in intrastate taxable supply of building bricks. Its aggregate turnover in the current financial year is 23 lakhs. So supplier of bricks. So exclusively engaged in supply of bricks. Bricks and roofing tiles, what is the limit? 20 lakhs. Even though they are exclusively engaged in supply of goods, but that goods are notified goods, due to that reason the limit will be 20 lakhs and their aggregate turnover is 23 lakhs. Are they required to get registered or not? Yes, they are liable to get registered. Hira of Himachal Pradesh is exclusively engaged in intrastate taxable supply of footwear. His turnover in the current financial year from Himachal Pradesh showroom is 32. He has another showroom in Nagaland. So Manipur, Mizoram, Tripura, Nagaland. Nagaland is MMTL and they are engaged in supply of taxable goods. Therefore, the limit will be 10 lakhs. As their aggregate turnover exceeds 10 lakhs, they should register in Himachal Pradesh and Nagaland. Last question, 35. Other authentication is not required for persons who are already registered. Examine and discuss the correctness of the statement. You are required to elaborate the relevant legal provisions. There are only few people who are not required to undergo other authentication. Who are they? Total 9. So that is partner who are required to undergo other authentication, authorized partner. So then in case of proprietorship from proprietor, HUF it is Karta, and company etc. managing director or whole time director, and who are not required to undergo authentication, so the remaining people. So that details we need to write here, and about fully about other authentication. Okay, so that's it. We are now moving on to the next area, that is invoice and time of supply, that we will complete, and then we will see composition scheme. Okay, so look into invoice and time of supply, which is in segment number 5, page number 60. Segment number 5, page number 60. In this invoice and time of supply, we have only 3 sections per. Section 31, that is due date of invoice. Section 12, time of supply in case of goods. Section 13, time of supply in case of services. First, due date of invoice, we need to remember just 6 points we have to remember. See, along with subsection, no need to remember, just the situation and the due date of invoice try to remember. All this due date of invoice is given in section 31. So in that section 31, total 6 situations we have. For goods, 3 situations. For services, 3 situations. For goods, 3 situations, that is normal cases, continuous supply of goods, sale on approval or on return basis. So continuous supply of goods means there will be successive supply of goods for which the payments are settled on a periodical basis. For example, so I am supplying the goods on a daily basis and we maintain a running account, and on a weekly basis or 15 days once or monthly basis or quarterly basis, the payments are settled. So that is called as continuous supply of goods. Then sale on approval or on return basis means I hand over the goods to you to use it, and I will give you a time limit. So if you like it, you can buy, otherwise you can return. That is known as sale on approval or on return basis. So in case of normal cases, so we need to check supply involves movement of goods or supply does not involve movement of goods. If supply involves movement of goods, then the due date of invoice is at the time of removal. If supply does not involve movement of goods, at the time of delivery. So what is the meaning of supply involving movement of goods? Under the contract of supply, goods start from one place and goes to the other place. For example, when you place an order in Amazon or Flipkart, so the sale is completed only when the goods are delivered to you. So under the contract of supply, goods are starting from one place to another place. So that is known as supply involving movement of goods. In that case, when they need to raise invoice at the time of removal. So whenever they are removing from their place, at the time itself they need to raise invoice. Suppose if you go to a supermarket, you purchase some goods and you carry that goods to your home. Even though there is movement of goods, but that is without involving supply. Supply does not involve movement of goods. But there is movement of goods. Movement of goods is after supply. So therefore supply does not involve movement of goods. Then we will take at the time of delivery. That's why whenever they hand over the package or whenever they hand over the goods to you, so they will be giving the bill also. So supply does not involve movement of goods, at the time of delivery will be taken. But in exam, we need to identify what is supply involving movement of goods or supply does not involve movement of goods. So because depending upon that only provision will differ. So for that I have given few situations. You can see in the next page to understand what is the meaning of supply involving movement of goods versus supply does not involve movement of goods. So this I have not given in the previous book. So have a look into this situation 1. Buyer places order with the seller. Seller dispatches the goods to the buyer. Buyer takes delivery of the goods and the supply is concluded. Now, supply involving movement of goods or supply does not involve movement of goods. Why supply involves movement of goods? Because seller dispatches the goods to the buyer. So which means under the contract of supply, goods are starting from one place and going to another place. So therefore, buyer takes delivery and supply is concluded only when buyer takes delivery. So which means under the contract of supply, goods are going from one location to another location. So supply involves movement of goods. Then situation 2. Situation 2, buyer places order with seller to install generator at the premises of buyer. Now seller brings the material, not generator, material required for making a generator and installs the generator at the buyer's premises. So the generator comes into existence at which place? Only at the buyer's place. And seller transfers the generator to the buyer, that is transfer of title. Now in this case, supply involves movement of goods or supply does not involve movement of goods. Why does not involve movement of goods? The goods here is generator that comes into existence only at the buyer's place. So therefore supply does not involve movement of goods. Once the generator comes into existence, thereafter there is no movement of generator now. So due to that reason, supply does not involve movement of goods. Then situation 3, buyer visits seller's place, buyer make purchase of goods, buyer transports the same to his place. So buyer purchases the goods, means sale is completed at the seller's place. Now, is it supply involving movement of goods? No. Even though buyer transports the same to his place, but that is after the supply gets terminated. So which means that supply does not involve movement of goods. Then situation 4, seller takes goods to buyer's premises. Order not placed by the buyer. Okay. Seller is only voluntarily taking the goods to the buyer's premises. Buyer did not place any order. Now seller offers the goods for sale to the buyer. Seller is telling you need this product, you can buy like that. Before buyer purchases the same and seller delivers the goods. Now, is it supply involving movement of goods? Why supply does not involve movement of goods? Because at the time when there is movement of goods, there is no supply. So at the time when I am seller taking the goods to your place, you did not place any order. So I don't know whether you will buy or not. So therefore there is no supply at the time of movement of goods. And whenever supply happens, thereafter there is no movement of goods because we deliver the product at the buyer's place. So again in this case supply does not involve movement of goods. Situation 5, ship is located at Mumbai port belonging to Mr. A. Mr. A in Tamil Nadu sold the ship to Mr. B of Kerala by way of transfer of documents. Mr. B takes control of the ship in Mumbai port. Now in this case, if you see, so supply involves movement of goods or supply does not involve movement of goods? Does not involve, because where the ship is located in Mumbai only. So now what is transferred from seller to buyer is only the documents of title, ownership title or deed. So therefore in this case the goods are in that location only. So therefore supply does not involve movement of goods. So these are the situations that could be tested in exam. So be careful, analyze it. So any question will be in these situations. So accordingly you need to change. So if supply involves movement of goods, then what will be taken as the due date of invoice at the time of removal? Supply does not involve movement of goods at the time of delivery. Continuous supply of goods. Continuous supply of goods means successive supply of goods for which the payments are settled on a periodical basis. In case of continuous supply of goods, we need to check whether there is payments received irrespective of the account statement or payments are received based on account statement. Account statement means whenever I am selling goods to you on a daily basis, I will maintain one list. So then I will share that list with you and then I will collect the money. So therefore when payments are collected, irrespective of account statement, means ad hoc some amount will be collected. Then for that the due date of invoice is at the time of receipt of payment. Suppose if the payments are collected based on account statement, the account statement date, not payment received date or account statement date, whichever is earlier, not that. Okay. For example, you can see one illustration to understand this. So take page number 62, look into illustration 2. Arjun Chemicals Tamil Nadu entered into contract with an ancillary industry to supply chemicals through pipeline. The payment terms, an ad hoc amount of 2 lakh per month is payable and the differential of 56,000 settled on a quarterly basis through account statement dated 6/7. So here what happens here is that the contract is like 3 months. For every 3 months the payments will be settled. But in that 3 months, every month they will receive some amount, 2 lakhs, 2 lakhs, 2 lakhs. Again after 3 months, they will see how much is the actual amount minus this 6 lakhs, the differential amount will be collected through account statement. Now, first 2 lakhs is collected based on account statement or irrespective of account statement? Irrespective of account statement. So what will be taken as the due date of invoice? As and when it is collected. What is the date on which it is collected? See below, 4th May. So that 4th May will be taken as the due date of invoice. Second 2 lakhs also collected irrespective of account statement. So whenever it is collected will be taken as due date of invoice. Third 2 lakhs also collected irrespective of account statement. So whenever it is collected will be taken as the due date of invoice. However, the differential amount 56,000, how recipient will know? Only based on account statement. So that 56,000 is collected based on account statement. Based on account statement. So account statement date will be taken as the due date of invoice. What is the account statement date? 6/7. So 6/7 will be taken as the due date of invoice. Are you understanding this? If it is whichever is earlier, then in the third case it should be 6/7, not 10/7. If it is whichever is earlier, that is account statement date or payment received date, whichever is earlier, then in this case it should not be 10/7 na, because whichever is earlier is 6/7. So that's why don't remember it as whichever is earlier. How you need to remember in case of continuous supply of goods? Come on. If the payments are received irrespective of account statement, payment received date. If the payments are received based on account statement, due date of invoice is account statement date. That is in case of continuous supply of goods. Then come back to sale on approval or on return basis. In case of sale on approval or return basis, 6 months from the date of removal or date of acceptance by the buyer, whichever is earlier. Because first we deliver the product and only when the buyer accepts, the sale will take place. But for that, if buyer is not accepting within 6 months, after 6 months it is deemed that the sale has taken place. So what is the time limit within which buyer should either accept or return? 6 months. Otherwise it will be treated as sale. So therefore, what will be the due date of invoice in this case? 6 months from the date of removal or date of acceptance by buyer, whichever is earlier. Now, these 3 situations, can you tell me? First, normal cases. What is the due date of invoice? Goods, normal cases. Supply involves movement of goods at the time of removal. Supply does not involve movement of goods at the time of delivery. Good. Then continuous supply of goods. Payment received based on account statement date. Payment received irrespective of account statement, payment received date. Then next, sale on approval or on return basis. 6 months from the date of removal or date of acceptance by the buyer, whichever is earlier. Then look into services. Services, normal cases, continuous supply of service, cessation of service. Normal cases, if it is banking and other financial services or insurance services, 45 days from the date of completion. That will be taken as the due date of invoice, which means whenever the service is completed, from the date within 45 days, invoice needs to be raised. If it is others, 30 days from the date of completion. Got it? So banking service or insurance service, what is the time limit by which invoice should be raised? 45 days from the date of completion. If it is others, 30 days from the date of completion. Then continuous supply of services. In case of continuous supply of service, what is continuous supply of service means? A service which takes more than 3 months to complete and involves periodic payment obligations, that is installments. Then it will be called as a continuous supply of service. So two conditions should be satisfied. First, it should take more than 3 months to complete and it should involve installment facility. Then it is a continuous supply of service. For example, you will be attending CA intermediate coaching. CA intermediate coaching, regular coaching, will it take more than 3 months to complete? Yes, definitely it will take more than 3 months to complete. And if installment facility is involved, it is a continuous supply of service. If there is no installment facility, it is not a continuous supply of service. Understood or not? Then, in case of continuous supply of service, we need to check whether due date of installment is ascertainable from the contract. Like on 5th January you have to pay this much, on 25th February you have to pay this much, on 8th March you have to pay this much. Like that, clearly the date and the installments are given. Then due date of installment is the due date of invoice. Is it clear? The date by which you need to pay that installment, that date is only known as due date of invoice. If due date of installment is ascertainable from the contract, such due date of installment. Suppose if the payment is linked to completion of an event, for example, in case of construction, they will say upon 30% completion you have to pay this much, upon 60% completion you have to pay this much, upon 100% completion you have to pay this much, like that. So they are linking it to completion. Now, when payment is linked to completion of an event, as and when that event is completed, invoice needs to be raised. Means whenever the 30% is completed, we need to raise invoice for the 30% amount. And whenever 60% is completed, we need to raise invoice for that amount. Understood or not? Then suppose neither we have the due date of installment in the contract, nor the payment is linked to completion of event, then as and when the payment is received. So that will be taken as the due date of invoice. 3 points. If due date of installment is ascertainable from the contract, the due date of installment. If due date of installment not ascertainable, but the payment is linked to completion of event, the date on which the payment is received. Suppose in the absence of these two, so that is if the payment is linked to completion of event, the date on which event is completed. In the absence of these two, as and when the payment is actually received. Then cessation of service. Cessation of service means abruptly stopping the service is known as cessation of service. Usually the cinema actors, what they do is that they sign a contract and they act for some 5 days or 10 days. Maybe there could be some difference of opinion between the director and the hero. So then the hero will walk out of the movie or the director will walk out of the movie. So then in that case, so what will happen? For the number of days they work for that movie, they will be receiving money from the producer. So therefore, this is known as cessation of service. So they enter into contract to provide the service, but they abruptly stopped providing the service. But for number of days for which they work, they need to collect money now. So when they need to give invoice, immediately upon cessation, no time limit, 30 days, 45 days and all. So say for example, a hero has signed a movie for 50 days and 5 days he acted in that movie. He came out after 5 days. Then immediately the 6th day, he need to give invoice for that 5 days amount. You understood? That is cessation of service. So tell me what are the 3 points in case of services, due date of invoice, normal cases, banking and other financial services, insurance service, 45 days from the date of completion. All other cases, 30 days from the date of completion. Then continuous supply of service. Due date of installment ascertainable, that due date of installment. Payment linked to completion of event, date of completion of event. Otherwise, date on which payment is received. Then in case of cessation of service, immediately upon cessation. Now look into one question related to this. Illustration 1 in page number 62. P Limited provides maintenance services to companies having computers in their offices in Maharashtra. On September 20, 2020, it enters into contract with Z Limited, where P Limited will maintain computers of Z Limited during October 1, 2020 and December 15, 2020 for an agreed consideration of 2 crore plus applicable GST. Due date of payment is October 20, first installment, November 20, second installment, December 20, third installment, and provision of service is completed on December 15. Payment is however made by Z on March 1st when the tax invoice should be issued. So due date of installment is ascertainable from the contract. So therefore due date of installment will be taken as the due date of invoice. Therefore first installment October 20 is the due date of invoice. Second installment November 20 is the due date of invoice. Third installment December 20 is the due date of invoice. Absolutely wrong. Because first of all it is not a continuous supply of service. Because check when they started service and when the service got completed. So the service is started on October 1st and it is completed on December 15. Means the service is not more than 3 months. So please look out for this in the question. So always, what is a continuous supply of service? A service which takes more than 3 months to complete. But here how many months it takes? 2.5 months. So it is not a continuous supply of service. Then it is a normal service. In case of normal service, when the invoice should be given, banking and finance or insurance are others. So 30 days from the date of completion. What is the date of completion? December 15. From December 15 you count 30 days. So that will be January 14. So January 14 will be the due date of invoice. Is it clear? Understood, pa? So we should not apply continuous supply of service in this case, because first of all, even though installments are there, but the service takes not more than 3 months to complete. That's why not a continuous supply of service. So these are the due date of invoice that we need to remember. So we completed 6 situations. What is the due date of invoice? Now we are moving on to section 12 and 13, that is time of supply in case of goods, section 12, time of supply in case of services, section 13. What is the purpose of time of supply? Mainly time of supply is to determine the due date of payment of GST. For example, if time of supply for a transaction falls in this month, then we need to pay GST by next month 20th. So that is the due date. So mainly when we need to pay tax depends upon the time of supply. So the objective of time of supply is mainly to determine the due date of payment of GST. Not only that, to determine the exchange rate. Because if you remember in value of supply, I told you exchange rate, CBIC notified rate or GAAP rate prevailing on the time of supply should be taken. Okay. So therefore, whenever the transaction is denominated in foreign currency, so that foreign currency needs to be converted into Indian rupees. For that purpose, so we need to take a exchange rate. So that exchange rate will be CBIC or GAAP rate. So it's not there in syllabus, so no issue, don't worry about that. But mainly what you need to know is, so on the time of supply, whatever is the exchange rate, that should be taken. Again, rate of GST. Which rate of GST should be taken? So on the date of signing the contract, one rate will be there. At the time when we actually provide service, one rate will be there. So which rate should be taken? Again, time of supply. So what is the objective of time of supply? 3 objectives. To determine the due date of payment of GST, to determine the rate of GST, and to determine the exchange rate. Okay. So kindly make note of this somewhere. Objective of time of supply. Objective of time of supply. Objective of time of supply, objectives of time of supply. So three objectives. Number one, to determine due date of GST. Number two, to determine rate of GST. And number three, to determine exchange rate. So these are the three objectives of time of supply. To determine due date of GST, to determine rate of GST, to determine exchange rate. This time of supply in case of goods is determined under section 12, and in case of services it will be section 13. Now you can see here in this 12 and 13 we have common provisions. So 12 subsection 1 and 13 subsection 1 says liability to pay GST is determined on the basis of time of supply. So therefore liability to pay GST depends upon time of supply, and this is common for both 12 and 13. Then 12 subsection 2, 13 subsection 2, if you see, so situation is same. In case of goods FCM it is 12.2. In case of service FCM it is 13 subsection 2. Then same way 12 subsection 3, 13 subsection 3, situation is same. So in case of goods RCM 12.3, service RCM 13.3. So but provisions are different. So therefore we need to remember 4 points first. Goods FCM, services FCM, goods RCM, services RCM. Okay. Then next 12 subsection 4 and 13 subsection 4, both situation and provision is same. That is time of supply in case of vouchers. So this is point number 5 that you need to remember. Then 12.5 and 13.5, again situation and provision is same. That is time of supply in case when you are not able to determine the time of supply as per above provisions. Point number 6. Then in case of addition to value in the form of interest late fee, again that is also common between goods and services. So 7th point. So these are the 7 points that you need to remember. So first try to remember the situation. So first situation is what? Goods FCM. Second, service FCM. Third, goods RCM. 4, service RCM. Then 5, vouchers. 6, residual cases. 7, interest late fee penalty for delay in receipt of consideration. If we complete these 7 points, time of supply under 12 and 13 is over. So these 7 points only you need to remember. First, in case of goods under FCM, what is the time of supply? We are not learning the due date of invoice, already we completed that. Now we are looking into time of supply. The time of supply is due date of invoice or actual date of invoice, whichever is earlier. In case of goods FCM, what is the provision pa? Due date of invoice or actual date of invoice, whichever is earlier. Due date of invoice means the date on which you should give the invoice. Already we saw that. Supply involving movement of goods, supply does not involve movement of goods, continuous supply of goods, sale on approval, we already discussed. That is the due date by which you should give invoice. And the actual date on which you gave invoice, whichever is earlier. For example, due date of invoice is 5th of March, but actual date of invoice is 1st March. So which will be taken as the time of supply? 1st March. Suppose if due date of invoice is 5th March, I gave invoice on 8th March. So which will be taken as the time of supply? 5th March. So whichever is earlier. Can you remember pa? So goods FCM, what is the provision? Time of supply? Due date of invoice or actual date of invoice, whichever is earlier. Then whether GST payable on advances in case of goods in this case? No. Why? Because say for example, March month we received the advance, but invoice we are raising in April. So what is the time of supply? April. Invoice only. Is date of payment given there? Is date of payment given there? No. Which means that if the payment is received in March month, but invoice is raised in April month, so we need to pay GST for April month only, not in March month. Means no GST on advances. GST not payable on advances. Okay. Then in case of services FCM, you see that If invoice is given within the due date, what is the due date for giving invoice? In case of services, already we know 45 days, 30 days, etc. We have discussed now. If invoice is given within the due date, then actual date of invoice or date of payment, whichever is earlier. Say for example, invoice is to be given within 30 days and I gave the invoice within 30 days. Say invoice date is 15th of March, but the date on which I received the payment is 20th of April. So which will be taken as a time of supply, whichever is earlier, 15th March will be taken. Suppose 15th March I gave invoice, but 1st March itself I received the payment. So which is earlier? 1st March. So whether GST payable on advances in this case? Yes, because date of payment is also one of the date. Suppose if payment is received in March and invoice is raised in April, which is earlier? March. So means we need to pay GST for that advance in the March. That's the reason why GST not payable on advances in case of goods, but GST payable on advances in case of services covered under FCM. Is it clear? Then suppose sir, if I am not giving invoice within the due date, what will happen? Say within 30 days or 45 days I need to give invoice, or continuous supply of service means within the due date, cessation of service means within the due date. If I have not given invoice within the due date, then what will be taken as the time of supply? Completion date or payment date, whichever is earlier. The date when service is completed, not invoice date. The date when service is completed or invoice payment date, whichever is earlier. So tell me two provisions you need to tell me. Goods FCM, service FCM. Come on, goods FCM, don't see book. Actual date of invoice or due date of invoice, whichever is earlier. Whether GST payable on advance in case of goods? No. Then services. Invoice is given within due date, invoice not given within due date. If invoice is given within due date, actual date of invoice or date of payment, whichever is earlier. Good. If invoice not given within due date, completion date or payment date, whichever is earlier. Whether GST payable on advances in case of services, FCM? Yes. Now we are moving on to the third point, that is goods RCM. In case of goods RCM, we don't know what are the goods which are covered under RCM. So that will be given in the question itself. Because goods RCM we don't have in syllabus for CA intermediate. So therefore that will be given in the question itself. Now from whose perspective we need to see? Because who is liable to pay GST, supplier or recipient? Recipient. So see from the recipient perspective. Whenever recipient is receiving the goods, whenever recipient is making payment to supplier, or 31st day from the date of invoice, whichever is earlier will be taken as the time of supply. So for example, I am selling goods to you on which you need to pay GST under RCM. The day on which you receive the goods. Second, the day on which you make the payment to me, or 31st day from the date of invoice. So I give you an invoice now from that 31st day, whichever is earlier. Understood? The date on which recipient has received the goods, the date on which recipient is making payment to supplier, or 31st day from the date of invoice. Here also, is payment one of the dates? Yes. Whether GST payable on advances? Yes. Say you gave me advance pa. Thereafter I dispatch the goods to you. You receive the goods thereafter. 31st day also thereafter. But which is earlier? Payment received date is earlier. So therefore, whether GST payable on advances in case of goods RCM? Yes. Then in case of services RCM, you see the difference. Goods RCM, 3 points. Date of receipt of goods, date on which payment is made to supplier, 31st day from the date of invoice, whichever is earlier. But in case of services RCM, first date is not there. Only the second and third date. That is, date on which payment is made to supplier, instead of 31st day, it is replaced with 61st day from the date of invoice. Come on, tell me 2 points. Goods RCM and service RCM. Goods RCM, date on which goods are received by recipient, date on which payment is made to supplier, or 31st day from the date of invoice, whichever is earlier. Very good. Then services RCM, date on which payment is made to supplier, or 61st day from the date of invoice. So 4 provisions we have completed. That is goods FCM, service FCM, goods RCM, services RCM. Now, we are moving on to the next three, only three more. Vouchers. In case of vouchers, what will be taken as the time of supply? First of all, what is this vouchers? We need to understand. Vouchers are like consideration. Vouchers are like consideration for supply of goods or services. For example, you go to Reliance Trends and you purchase some dress. And when you buy the dress, say for example, for 3,000 rupees you purchased. When you purchase for 3,000 rupees, they gave you coupons. Okay. So they gave you a coupon for 500 rupees. And that is next time when you are coming to that shop and you buy garments worth rupees 1,500, you can redeem this 500 rupees voucher. Okay. So now, say next time you went to the shop, you purchased garments for 2,000. So now you gave voucher 500 and you paid money 1,500. Now the shopkeeper should pay GST on 2,000, 1,500, 2,000. Because the shopkeeper receives 500 rupees voucher and 1,500 cash. Correct? But GST payable on entire 2,000. Why? Because voucher is treated as consideration. You understood or not? So, voucher is treated as consideration against supply of goods or services. Let it be a gift voucher or you purchase that voucher, whatever it may be, the treatment will be same. Now, these vouchers are divided into two. Identifiable voucher and non-identifiable voucher. Identifiable voucher means it can be redeemed against purchase of specific goods or services. That is known as identifiable voucher. For example, you go to Pizza Hut or you go to Domino's or you go to McDonald's. You eat food there and they give you one voucher. So next time when you visit, you can get one medium pizza free. What is this voucher? Identifiable voucher. Why? Because the product or the service is mentioned against the voucher. So then it will be called as identifiable voucher. Suppose if you get a voucher for 500 rupees, which means you can redeem any product worth rupees 500, correct or not? So which means that is non-identifiable voucher. The voucher can be redeemed against supply of any goods or services. So vouchers are divided into two: identifiable voucher, non-identifiable voucher. Identifiable voucher means that can be redeemed against particular product or service. Non-identifiable voucher that can be redeemed against any product or service of the supplier. Now, in case of identifiable voucher, today I am giving you the voucher. Today itself I know against which product or service you are going to redeem this voucher. Correct? Because it is identifiable voucher. So, I need to treat that this product is sold today itself or this service is rendered today itself. I need to pay GST. For example, today I am giving you one voucher for one medium pizza. Now, you will be redeeming it in future. But today itself I need to consider that I sold one medium pizza and I have to pay GST. Is it clear? So, in case of identifiable voucher, what is the time of supply? The date of issuance of voucher. But I did not sell pizza. But treating it as sale of pizza, I have paid GST. Now, you are not coming and redeeming that voucher. You are not at all coming and redeeming this voucher. Then unnecessary I paid GST, that I will get it as a refund. You understood? Suppose if you redeem the voucher, at the time I give you the medium pizza, should I pay GST again at the time? No, because already I paid the GST at the time of issuance of voucher itself. Understood the treatment in case of identifiable voucher? So in case of identifiable voucher, what is the time of supply? At the time of issuance of voucher. Then in case of non-identifiable voucher, so I will know against which product or service you will redeem only when you redeem, correct? So today I don't know. So therefore, the time of supply is not at the time of issuance of voucher, at the time of redemption of voucher. So whenever you come to my shop and redeem that voucher and buy anything, at the time only I need to pay GST on that goods or services. Suppose if you are not coming and redeeming at all, I will not pay any GST on that. So which means the time of supply is only at the time of redemption. So the question of refund will not arise. So the question of refund will arise only in case of identifiable voucher, because today itself I would have paid GST considering that the sale has taken place, but at a later point of time when you are not redeeming voucher, I will get refund. But in case of non-identifiable voucher, first of all I will pay GST only when you come to my shop and redeem the voucher, otherwise I will not pay GST. Is it clear? Now what is that you need to remember in case of vouchers? Come on. Time of supply in case of voucher, identifiable. At the time of issuance of voucher, non-identifiable. Clear? Then when time of supply is not ascertainable as per above provisions, that is in residual cases, simple, just remember. So if a person is required to file return, the due date of filing return is the time of supply. If a person is not required to file return, as and when he pays tax, that date is the time of supply. Understood? So suppose if time of supply cannot be ascertained as per above provisions because of not having sufficient information, so we will take, if the person is required to file returns, due date of filing return. If the person is not required to file return, date on which he pays the tax. Clear? So residual cases, periodical return has been filed, due date of filing return. Periodical return not filed, date of payment of tax. Then last case, addition to value in the form of interest, late fee or penalty for delay in receipt of consideration. In case of interest, late fee or penalty for delay in receipt of consideration, so GST is payable on actual basis, that is as and when the interest is received. I told you long back. So interest is always taxable on receipt basis. So whenever it is actually received, that is the time of supply, not whenever it accrues. So whenever it is actually received, that is given in subsection 6. Now I want you to tell me these 7 points. Come on, first goods FCM. Don't see a book. Please close the book for some time. So goods FCM, actual date of invoice or due date of invoice, whichever is super pa. Then services FCM. Two situations. Invoice given within due date, invoice not given within due date. Invoice given within due date or date of whichever is earlier. Good. Actual date of invoice or date of payment whichever is earlier. Then if invoice is not given within due date, completion date or payment date, whichever is earlier. Super. Then goods RCM, date of receipt of goods, date on which payment is made to supplier or 31st day from the date of invoice, whichever is earlier. Good. Services RCM, date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. Very good. Then vouchers, identifiable at the time of issuance, non-identifiable at the time of redemption. Then in case of residual cases, periodical return required to be filed, not filed. Periodical return required to be filed, not required to be filed. Required to be filed, due date of return, not required to be filed, date of payment of tax. Then interest, late fee, penalty, as and when it is actually over pa. So this is about 12 and 13. Now on this time of supply, we have some additional points. Have a look into that. What will be considered as the date of payment? In case of supplier, the date on which supplier enters in his books or date on which the supplier's bank account gets credited, whichever is earlier will be taken as the date of payment received. Suppose you give me a check, I will pass a journal entry, then I will send a check for collection. Thereafter my bank account gets credited. Whichever is earlier is the date on which I made an entry in my books. Suppose you make a NEFT RTGS transfer, fund transfer. So money I will receive in my bank account first. Then after BRS, I will enter the entry in my books. So whichever is earlier is the date of credit in my bank account. Okay. So what is the meaning of date of payment from supplier point of view? Date of entry in the books of supplier or date of credit in the bank account of supplier, whichever is. From recipient point of view, date of entry in the books of recipient or date of debit in the bank account of the recipient, whichever is earlier. Then In case of goods covered under FCM, whether GST payable on advances? No. But in case of services covered under FCM, whether GST payable on advances? Yes. As GST payable on advances in case of services, so therefore, if some advance is received this month, for which we are raising invoice next month, when we need to pay GST? No, advance received this month. For this advance, we are raising invoice next month. Service it is. Okay. So when we need to pay GST? This month or next month? Whichever is earlier. This month. So we need to pay GST this month. Because GST payable on advances in case of services. So in case of services, if we receive advance this month, but for this advance, if we raise invoice next month, the time of supply will be whichever is earlier. So this month itself we need to pay tax. However, there is a small relaxation we have. That is, if the excess amount received is up to 1,000 rupees beyond the invoice. For example, I invoiced you for 5,120 rupees. I invoiced you for 5,120. But you gave me 6,000 rupees because this difference anyhow will be adjusted in the next month. So you gave me extra. So you gave me extra how much? So 6,000 minus 5,120, that is 880 rupees. You gave me extra. Okay. This 880 rupees extra amount received this month, for which invoice will be raised in the next month. Logically speaking, I have to pay tax this month itself now, whichever is earlier. But I have an option to pay GST on this 880 rupees at the time of invoice itself, that is in the next month itself. But this facility I will get only if the excess amount received is up to 1,000 per invoice. Up to 1,000 rupees received in excess of the invoice. In case of services covered under FCM, time of supply can be date of invoice or determined as per section 13 subsection 2. So supplier has the option to choose. Means either 13 subsection 2 means what? Invoice date or payment date, whichever is earlier, or we can go only as per date of invoice, and the supplier has option to choose. Understood? But this facility, when the supplier will be getting only if the excess amount is up to 1,000 per invoice. Then suppose if I raise invoice for 5,120 and you gave me 6,500 rupees. Now in that case, beyond 1,000 rupees, so therefore this facility I will not get. So this month itself I have to pay GST on that excess amount received. Then in case of supply between associated enterprises. So associated enterprises is defined under Income Tax Act section 92A, which is not applicable for you, but it will be given in the question itself that they are associated enterprises. You remember, to become associated enterprises, one company should invest 26% in the other, then they are associated. But definitely it will be given in the question as to associated enterprises. You are importing services from associated enterprises. Generally, in case of import of service, what will be taken as the time of supply? Import of service is FCM or RCM? RCM. In case of import of service RCM, what will be generally taken as the time of supply? Date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. But between associated enterprises, there is no invoice. That's why what they are telling, take date on which payment is made to supplier. Instead of 61st day from the date of invoice, you take date of entry in the books of recipient, whichever is earlier. So in case of supply of service between associated enterprises, where supplier is outside India and recipient in India, time of supply shall be date of entry in the books of recipient or date of payment to supplier, whichever is earlier. Generally, we take date of payment to supplier or 61st day from the date of invoice, whichever is earlier. That 61st day from the date of invoice is replaced with date of entry in the books of recipient. Then, when goods are taken outside India for exhibition, is it supplied today? No. But within 6 months, the goods should be either sold or should be brought back. Otherwise, that sale on approval or on return point gets subtracted, and after expiry of 6 months, the goods are deemed to have been sold. Understood? When goods are taken outside for exhibition, what is the time limit within which it should be brought back? 6 months. Otherwise, it is deemed to be supply as per 31 subsection 7, that is sale on approval or on return basis. 6 months from the date of removal or date of supply, acceptance, whichever is earlier. So within 6 months, if it is not brought back or not sold, it is deemed to have been supplied. Then look into illustration 3. So we completed time of supply in case of goods, services, section 12 and 13 fully we completed along with additional points. See this illustration 3. Miss Rima purchased a gift voucher from Shopper Stop, a departmental store worth rupees 2500 on 30/10/2020 and gifted it to her friend on occasion of her birthday on 4/12. Her friend encashed the same on 1/1 for purchase of a handbag. Determine the time of supply. Now tell me, is it identifiable voucher or non-identifiable voucher? Non-identifiable voucher. What will be taken as the time of supply in case of non-identifiable voucher? At the time of redemption. What is the date of redemption of this voucher? 1/1/2021. So that will be taken as the time of supply. Then next, illustration 4. Mr. A registered person, received goods from Mr. B, an unregistered dealer. Mr. B issues invoice on 30th June 2020. The said goods are notified for the purpose of section 9 subsection 4. So which means goods covered under RCM. Goods covered under RCM, what is the provision? Date of receipt of goods. So here find the time of supply in the following independent cases. A received the goods on 15 July. So 15 July. Then second, date on which payment is made to supplier. Payment is not yet made. Then third, 31st day from the date of invoice. What is 31st day from the date of invoice? 31st July. So 15th July or 31st July, whichever is earlier, 15 July will be time of supply. Second case, you tell me. Second case. 3rd August, goods received. Payment made 4th August. 31st day is 31st July, whichever is earlier. Understood? Date of receipt of goods 3rd August. Date on which payment is made to supplier 4th August. 31st day from the date of invoice is 31st July, whichever is earlier, 31st July. Next, the third one. 8th July. Why? Whichever is earlier is 8th July. Payment date 8th July. Received goods on 8th July. 31st July. Whichever is earlier, 8th July. Then fourth case. 9th July, 10th July goods are received, payment 9th July and 31st July, whichever is earlier, 9th July. Understood? Then illustration 5. Mr. X, a registered supplier, supplied certain goods to Mr. Y on 6 months credit with a penalty clause in the agreement levying a penalty of 12% per annum of the invoice value in case of delayed payment. The invoice was dated 1/12/2017 and the invoice value was 20,000. Mr. Y could not make the payment on the due date due to unavoidable reasons. He, however, made the payment of the invoice value on 1/6/2018. So you change this to 5 months. So not 6 months, you change this to 5 months. 5 months. So when is the invoice raised? 1/12 means December month. So what is the time limit within which the payment should be made? December, January, February, March, April. So by 1st May, the payment should be made. But when the payment is made? On 1st June. So what is the delay? 1 month delay. Correct? Sir, 1st December to 1st January, 1 month. Then 1st February, 1st March, 1st April, 1st May. So that is the 5 months. So therefore 1st June it is made. So there is a delay by 1 month. So Mr. X raised the debit note for the penalty amount. There being dispute on this, the matter was in arbitration, which was finally resolved with Mr. Y agreeing to pay half of the penalty amount. So what is the penalty here? 1 month delay for 1 month on 20,000. So 20,000 into 12% into 1/12. So that is 200 rupees. But in that 200 rupees, how much paid? Only half is paid. Means 100 rupees is only paid. So 100 rupees only taxable. Because interest, late fee, penalty, only the actual amount received is taxable. That too on the date when it is actually received. That is 12/12/2018. Understood? Then next we have various documents involved in GST. Mainly this is for short note or MCQ questions. So first, tax invoice. Already we have seen tax invoice. So who will give tax invoice? Supplier to recipient. But in one case, recipient will give tax invoice to supplier. When? In case of RCM. Generally, if supplier is registered, supplier will issue. But if supplier is unregistered, and recipient will issue in case of RCM. And tax invoice in case of taxable goods and taxable services. What is the time limit by which the tax invoice needs to be issued? So the time limit already we have seen. So that is 30 days, 45 days, supply involving movement of goods, etc. as per that. Then bill of supply. Bill of supply is a document that is to be issued in case of exempted supply of goods or services. A registered person making taxable supplies, tax invoice. A registered person making exempted supplies, bill of supply. Or paying tax under composition scheme, because a person opting for composition scheme cannot collect GST from the customer. So they need to pay GST out of their pocket. So due to that reason, they cannot give tax invoice, but the name of the document will be bill of supply. So who will give bill of supply? A registered person making exempted supplies or a person opting for composition scheme. And what is the time limit for bill of supply? Same as the time limit for tax invoice. Then in case of low value supplies, low value supply means value of supply less than 200 rupees. In case of value of supply less than 200 rupees, neither tax invoice nor bill of supply is required if three conditions are satisfied. Condition number 1, the recipient is unregistered. Condition number 2, recipient do not require tax invoice. Condition number 3, a consolidated invoice should be prepared at the end of the day for accounting purpose. No need to give it to anyone, but for accounting purpose we need to prepare. So low value supply means value of supply, each supply. For example, you go to one shop, purchase one chips packet and one Coke bottle. So it does not exceed 200 rupees. Now in that case, they don't have to give tax invoice if it is a B2C supply, means supply to an unregistered person. Number 2, recipient is not asking for tax invoice, but all these low value supplies, they have to enter in a consolidated invoice, prepare it at the end of the day. However, there is one exception to this, that is in case of cinema theaters, multiplex cinema theaters, even if the value of ticket is less than 200 rupees, but they need to give an invoice. In that case, e-ticket is considered as tax invoice. You can see the note. In case of multiplex theater, an invoice, e-ticket deemed as invoice, to be issued even if value of supply is less than 200. Less than 200 per, not equal to 200. If it is equal to 200, that is not called as low value supply. Then say this. So registered person making supply of goods or service, if they make taxable supply, they will give tax invoice. If they make exempted supplies, they will give bill of supply. If they make both taxable and exempted supplies, if it is B2B, separate tax invoice and separate bill of supply. But if it is B2C, means in single document itself, they can mention both taxable supplies as well as exempted supplies. That is called as single tax invoice cum bill of supply. But this single tax invoice cum bill of supply is only in case of B2C. Then revised tax invoice. Revised tax invoice means whenever I am liable to get registered and I make application for registration within 30 days. Say I commenced business on 25/5/2022. Then I crossed the aggregate turnover. Threshold limit. I crossed the aggregate turnover threshold limit on 30/9/2022. Thereafter, I will make application for registration REG1. Application for registration REG1 I am making on 25th October 2022. Thereafter, I got the registration certificate on 5th of November 2022. I got registration certificate REG6. Now, between 39/2022 to 5/11, between 39/2022 to 5/11, I will make some inward supplies during this period. So these inward supplies, so I can take ITC. no issue. I can take ITC. But when I can take ITC? After 511. Same way, this period I will make outward supplies. So for these outward supplies, I have to pay GST. But to pay this GST, I cannot recover the GST from my customer as and when supply takes place. Then when I can recover GST? After 511, I can recover the GST for supplies between this period, and that should be by giving revised tax invoice. And what is the time limit by which I need to give revised tax invoice? By 5/12/2022, that is within 1 month. Within 1 month after the date of certificate of registration, I can give revised tax invoice to recover the GST with respect to outward supplies between the date I am liable to get registered till the date I got the certificate of registration. But suppose if I make application for registration not within 30 days, can I give revised tax invoice? No. So revised tax invoice can be issued only if the application is made within 30 days. Revised tax invoice cannot be issued if application is not made within 30 days. And what is the time limit within which we need to give revised tax invoice? Within 1 month from the date of certificate of registration. And every registered person has been granted registration with effect from a date earlier than the date of issuance of certificate of registration. He may issue revised tax invoice in respect of taxable supplies effected during the period starting from the effective date of registration till the date of certificate of registration. So what is the effective date of registration? If you make application for registration within 30 days, the date on which you are liable to get registered is the effective date of registration. If you are not making application within 30 days, the date on which registration certificate is granted. As effective date of registration and the date of certificate of registration is same date, that's why we cannot give revised tax invoice in case of application not made within 30 days. Understood? So, in simple words, what you need to remember, what is revised tax invoice? A revised tax invoice is a document issued by registered person with respect to outward supplies between which period? Between the period the person is liable to get registered till the date they got the certificate of registration. And this revised tax invoice will be given after we get the registration certificate within 1 month. However, revised tax invoice cannot be issued if the application is not made within 30 days. That much you need to remember. Then receipt voucher. So receipt voucher is a document which will be given by supplier to recipient whenever the payment is received before preparing the invoice. That is, invoice is not yet given. Advance is collected. For that advance, so there should be some evidence. So that's why supplier should be giving a receipt voucher to the recipient. So when advance payment is received, payment received before issuance of invoice, then supplier will give a receipt voucher. Then payment voucher. Payment voucher is given by who is making payment? Recipient. So recipient will be giving the payment voucher to the supplier when in case the transaction is covered under RCM. When the transaction is covered under RCM, so recipient will be giving payment voucher to the supplier at the time of making payment. Then there is something called as refund voucher. That is, first I received advance. When I received advance, I gave a receipt voucher. Now I returned that advance. I cancelled the supply. I returned the advance. Now in that case, I will be giving a refund voucher. But remember, refund voucher to be given before preparing invoice if you return the amount. Suppose after preparing invoice, if I return the amount, what is the name of the document? Credit note. Credit note, because we prepared invoice. Now to cancel the invoice, we need to give credit note. Understood or not? So refund voucher is advance received for which receipt voucher is issued. If refunded before issuance of invoice, then the refund voucher to be issued. And who will be giving refund voucher to whom? Supplier to recipient. And if amount is refunded after issuance of tax invoice, then what is the name of the document? Credit note. Then there is something called as delivery challan. That is, whenever there is a movement of goods and that movement of goods is without involving any supply. Without involving any supply means what? Say goods sent on job work, sale on approval or on return basis, or goods sent from head office to branch office within the state for which they have not obtained separate registration. These are some examples of supply not involved, but there is movement of goods. Then in that case, that movement of goods should accompany a document called as delivery challan, and even we need to give a e-way bill. We studied e-way bill. E-way bill is required whether the supply that is there or not. But if there is a movement of goods, we need to give e-way bill. So what are the documents that are required in that case? Delivery challan plus e-way bill. Understood? Then next one. So the consignor may issue delivery challan for the purpose of supply of liquid gas where the quantity at the time of removal is not known. That is, I am taking the liquid gas. I don't know how much the buyer will buy. So therefore, I will prepare a delivery challan. Same way, goods sent on job work or transportation of goods for reasons other than by way of supply. So means whenever there is movement of goods without involving supply, the name of the document is delivery challan. Who will be giving delivery challan to whom? Supplier will be giving to recipient. Then you can see in the next page. So how many copies of invoice should be prepared? In case of goods, invoice should be prepared in triplicate, 3 copies. Original copy for the recipient, duplicate copy for transporter, and third copy for the supplier. In case of goods, 3 copies. Original for the buyer, duplicate for the transporter, third copy for the supplier accounting purpose. In case of services, only 2 copies, duplicate. So original for the recipient and duplicate for the supplier. Then we have 2 important concepts, that is e-invoice and dynamic QR code. So what is this e-invoice means? E-invoice means a normal invoice we will prepare, and for that invoice we upload in the portal, and we will be obtaining 3 things for that normal invoice. Then that normal invoice will become a e-invoice. What are those 3 things we need to obtain from the portal? Invoice reference number. Invoice reference number. Mainly this e-invoice has been brought in order to control the fake invoices. The moment I upload the invoice into the portal, the invoice is captured. So which means tomorrow the supplier cannot say I am not required to pay tax. He need to pay the tax and the recipient will get the ITC. So that is the advantage of e-invoice. So what we need to do? A normal invoice we prepare. That normal invoice we will upload it into a portal. What is that portal? Invoice registration portal. And in that portal, once we upload, we will obtain 3 things for that normal invoice. That is invoice reference number, quick response code, QR code, and digital signature. So these 3 things once we get to this normal invoice, now this invoice is called as a e-invoice. Understood or not? So tell me, what is a e-invoice? Obtaining the following from invoice registration portal for a normal tax invoice is known as e-invoice. What are those following? Invoice reference number, QR code, and digital signature. Okay, then that is e-invoice. And what is the e-invoice process? You can see that in page number 72. E-invoice process. So first, there is a taxpayer. That taxpayer will prepare the invoice as per the billing or ERP system. Then he will convert that invoice into .json file, JavaScript object notation. So then he will upload it into invoice registration portal using the API plugins. Okay, so application interface plugins. So using that, they will upload this JSON file to invoice registration portal. Then this invoice registration portal will be giving 3 things, that is invoice reference number, digital signature, and QR code. From there it will go to GST system and e-way bill system, which means again in GST portal and e-way bill portal we don't have to enter the invoice details, automatically the data will be captured. And in GST system, suppliers GSTR1 will be updated and recipients GSTR2B will be updated. So they don't have to do any data entry. Is it clear or not? So suppliers GSTR1 is updated and recipients GSTR2B is updated, and the buyer can anytime check whether this invoice is correct or not by entering the invoice reference number in the portal. So these are the process 8 points. So first, normal invoice will be prepared in billing. Second, convert into .json file. Third, upload it into the portal. So using API, and in the portal they will be giving so 3 things: invoice reference number, digital signature, QR code. Then it will be sent to e-waybill system and GST system. In the GST system, suppliers GSTR1 gets updated and recipients 2B gets updated. Okay. So what is the advantage of e-invoicing? The advantage of e-invoicing is that auto-populated invoices in GSTR1 and GSTR2B and e-waybill. So again, they don't have to do data entry, and it will eliminate the fake invoices. Okay. So then this e-invoice, okay, we understood. Then what is dynamic QR code in invoice? So first we are discussing what is e-invoice, what is dynamic QR code, and then we will see to whom it is applicable, to whom it is not applicable. Okay. First we studied e-invoice. You understood that e-invoice na? Now, dynamic QR code. Dynamic QR code does not mean generating anything from the portal, but we have to collect the payment by scanning this QR code. That is known as dynamic QR code. For example, so whenever you go to a shop, you scan the QR code and you enter the amount and you will pay. That is called as static QR code, wherein any amount the code will be same. But dynamic QR code is like, if you buy anything from Amazon or Flipkart, and if you select pay on delivery option, at the time when the person delivers the product to you, when you say that I will make through GPay or PhonePe, he will create one ID, one code, and he will give it to you. The moment you scan it, the amount also will automatically come. That is called as dynamic QR code. So the payment should be collected by scanning the dynamic QR code, mainly to encourage digital payments. Government has brought this. Okay. And in this case, dynamic QR code will be prepared. The code will be generated from the government portal, sir. No. Dynamic QR code will be prepared through third-party applications. We have a lot of apps wherein we can prepare a dynamic QR code. But while generating a dynamic QR code, we need to enter 5 details. Mentioning these 5 details, we need to prepare a dynamic QR code. There are third-party applications, bank apps, and payment gateway apps. So even POS devices also is having dynamic QR code facility. So this dynamic QR code should be entered should be generated by entering 5 details. What are those 5 details? GSTIN of the supplier. You please see there, GSTIN of supplier. Then UPI ID of the supplier. Then bank account and IFSC code of the supplier. Then invoice number and date. Then invoice amount with breakup of value and tax. Entering these 5, if we generate a code, that is called as dynamic QR code. First 3 is static, correct? Bank, that is bank details will be static, UPI ID will be static, supplier GSTIN will be static. Actually, what changes for every invoice is invoice number and date and invoice amount with breakup of value and tax. Understood? So what are the 5 fields, pa? GSTIN of supplier, UPI ID of supplier, bank account and IFSC code of the supplier, invoice number and date, invoice amount with breakup of value and tax. Then UPI ID of the supplier, we have an exception. That is, if the payment is not collected by supplier but collected by a e-commerce operator or a courier agency, then that courier agency or e-commerce operator UPI ID should be given. For example, I am selling a product through Amazon. I am not collecting the money directly, but I authorize Amazon to collect. So whose UPI ID should be mentioned? Amazon's UPI ID should be mentioned. Then bank account and IFSC code of the supplier. Exception is not required if UPI ID is linked with the bank account. So that is, generally UPI ID will be linked with the bank account. No sir, not necessary always, because I have a bank account in IndusInd Bank, but my UPI ID is OK Axis. Okay, I don't have bank account in Axis Bank, but my UPI ID is OK Axis, because only limited banks are giving UPI IDs. So other banks are having association like SBI, HDFC, then ICICI, Axis, these are the only banks, like limited banks, which will be giving UPI ID. But there are many banks in India. So all banks are not providing UPI ID. So therefore, if I am having account in HDFC Bank, then definitely my UPI ID will be linked with HDFC Bank. Then no need to give UPI ID separately. But if my bank account is not connected to UPI ID, means my bank is not giving UPI, so then in that case, so I have to mention the UPI ID as well as bank account. Is it clear? Then invoice number and date. For this invoice number and date, generally in case of retail sales means there will be multiple counters. When you go to a supermarket, some 6-7 counters will be there. In these 6-7 counters, parallelly they will be generating invoices. So invoice number cannot be entered because they cannot discuss and enter as to what is the invoice number. That's why every counter, they can create a unique reference number. That unique reference number can be entered in the place of invoice number and date. Then invoice amount with breakup of value and tax. That is, generally we are receiving money before preparing invoice. No need to collect the money through dynamic QR code because already money collected, you understood. Money is collected before preparing invoice. Now no need to collect through QR code. So no need to enter QR code in the invoice because the payment is already collected. However, if part payment is collected before invoice and remaining amount is collected after invoice, then for what amount the dynamic QR code should be generated? For the remaining amount which is to be collected after preparing the invoice. So part payment received before invoice and remaining after invoice, then only the balance due should be mentioned. And exception to mentioning dynamic QR code invoice is what? If payment is received before or at the time of generating invoice and cross reference of such payment is received is entered, that is sufficient. No need to enter dynamic QR code in invoice. When no need to enter dynamic QR code in invoice? If the payment is collected before preparing the invoice, then the payment reference if we give, that is sufficient. Then next, to whom e-invoice and dynamic QR code is not applicable. This is very important for short note. But you should not write the mnemonic in the exam. You should not write biggest or you should not write big toe like that. You have to explain. See, mnemonics and all you should remember, but you should not write in the exam. In exam you have to explain that and write. Okay. First, e-invoice is not applicable in case of biggest. So these two are important short note questions. It can be asked. Biggest is B for banking company, I for insurance company, then G for GTA, goods transport agency. Another G is government department or local authority. Then E for exhibition of film in a multiplex theatre. So like PVR cinemas, etc. and all. If you see PVR cinemas, definitely, so their turnover is very big, but they are not required to give any invoice. Okay. So E for exhibition of film in a multiplex theatre. Then S for SEZ unit. So inside a special economic zone, there is a unit. They are not required to give e-invoice. And T for transportation of passengers by any mode, not transportation of goods. For example, airlines or railways or any transporter who is transporting people. So they are not required to give e-invoice. So total, this biggest, this case, e-invoice not required. So what is the full form of the biggest? Can you tell me? B for banking company, I for insurance company, G for GTA, then government department or local authority, E exhibition of film in a multiplex theatre, S SEZ unit, then T transportation of passengers by any mode. Who are not required to give dynamic QR code is same as biggest, but minus S, SEZ unit is removed. In that place, we have OIDR supplier. So remember this as big toe. So B, same, banking company. I, same, insurance company. G, GTA. Another G, so government department, local authority. T also same, transportation of passengers any mode. O alone extra. What is generally O? We have heard OIDR supplier. So OIDR supplier located outside India making supply to non-taxable online recipient in India. Then E is same, exhibition of film in a multiplex theater. So these cases, dynamic QR code is not required. So anyway, the question can be asked, don't interchange and write. For e-invoice, it is biggest. For dynamic QR code, it is big 2. Only difference is this place. So here SEZ unit and here OIDR supplier. Then next, so here to whom e-invoice and dynamic QR code is applicable. So take page number 71. 5 minutes pa, we will complete and we will take break. So to whom e-invoice and dynamic QR code will be applicable? If aggregate turnover in any previous year between 2017-18 to 2021-22, aggregate turnover between 2017-18 to 2021-22, any one year, if it does not exceed 10 crores, neither e-invoice nor dynamic QR code. Okay. Any previous year between 17-18 to 21-22, if it does not exceed 10 crores, any year it does not exceed 10 crores, then neither e-invoice nor dynamic QR code. Suppose if the turnover exceeds 10 crores but does not exceed 500 crores, for B2B supplies they need to give e-invoice, for B2C supplies they are not required to give dynamic QR code. But if the aggregate turnover during any previous year between 17-18 to 21-22 exceeds 500 crores, for B2B they have to give e-invoice, for B2C dynamic QR code. So therefore e-invoice is applicable only in case of B2B supplies. What is B2B supplies means? Supplies to a registered person, that is B2B. B2C means supplies to a unregistered person. So in case of B2B supplies only e-invoice required. That too when required? If aggregate turnover in any one financial year from 17-18 to 21-22 exceeds 10 crores. And when it is dynamic QR code B2C, that too in any one year if the aggregate turnover during previous year, any one year exceeds 500 crores. And invoice should be in prescribed form INV1, and it is optional for a taxpayer who is required to give e-invoice. So only when their aggregate turnover exceed 10 crores. But suppose if it does not exceed 10 crores also, can I give? Yes, no one will stop. And e-invoice gets auto-populated in GSTR1 and e-way bill. One important point is there with respect to e-invoice. Remember, I am required to give e-invoice, but I have not given e-invoice. I gave a normal invoice and I entered this normal invoice in GSTR1 and it came in your 2B. Even then you cannot take ITC because I have not given e-invoice. So whenever for a supplier e-invoice is applicable, but if that supplier has not given e-invoice but gave a normal invoice, we cannot take ITC with respect to that invoice even though it is reflected in our GSTR 2B. Understood? So there is no need to carry physical copy of the invoice if e-invoice is prepared, because invoice needs to be prepared in 3 copies, original, duplicate, triplicate, like that. But that is not required in case of e-invoice. So just if you communicate the QR code to the officer whenever they stop the vehicle, that is sufficient. Then next, so we need to mention that if you are not required to give e-invoice, that's an amendment, as the recipient cannot take ITC. If suppose you are required to give e-invoice but you are not giving e-invoice, then recipient cannot take ITC. Then how recipient will know whether you are supposed to give e-invoice or not supposed to give e-invoice? Suppose if you are covered under this biggest cases, then you need to give a declaration that even though my turnover exceeds the limit, but as I am covered under this exception list, so I am not required to give e-invoice. Like that, we need to give a declaration in the invoice. That is this. Then next, illustrations and FAQs in this regard. X Limited making outward supplies taxable under RCM 9(3), and X Limited is registered for the current year 2022-23. Aggregate turnover during 21-22 is 80 crores, means it exceeds 10 crores. And X Limited also makes supplies on which they need to pay GST under FCM. Whether e-invoice is required, listen carefully. My aggregate turnover during previous year exceeds 10 crores I am making supply covered under RCM. Now in this case, should I give e-invoice? I am not required to pay, you are required to pay. Let it be. Whether I pay tax or you pay tax, it is my outward supply. So I have to give e-invoice. So e-invoice is required with respect to outward supply, whether it is covered under FCM or RCM. Now, in one case we discussed that invoice needs to be given by recipient to supplier, RCM. That inward supplier, outward supplier, recipient. For recipient, it is inward supply or outward supply? Inward supply. So e-invoice is only in case of outward supply. So for inward supplies, e-invoice is not applicable. So it is an inward supply and not an outward supply. So for inward supplies, e-invoice is not applicable even if turnover exceeds 10 crores. Then whether e-invoice or dynamic QR code invoice is required in case of supplies to UIN holder, because I discussed while discussing registration chapter that UIN holder we need to treat it as B2B supplies, correct? We need to treat it as B2B supplies. That is only for normal invoice. But when it comes to e-invoice, we will not treat it as B2B supplies. Means it will be B2C only. Means we need to give e-invoice or dynamic QR code. Dynamic QR code in invoice. So any person who has obtained UIN is not a registered person. Therefore, any invoice issued to that person shall be treated as B2C supply for e-invoice purpose. Means e-invoice is not required, only dynamic QR code. Then, in case of exports, always e-invoice is required, but dynamic QR code is not required. In other cases, SEZ unit is specified now in that biggest. That's why e-invoice not required. So for B2B supplies, e-invoice. For B2C supplies, dynamic QR code. But for SEZ unit, it is not given for e-invoice. That's why not required. But whether SEZ unit is required to give dynamic QR code? Yes. Because for the dynamic QR code, what is the list? Big toe. In that big toe, SEZ unit is not there. Whether dynamic QR code is required in case of recipient of service located outside India? No. Because how the person located outside India can make the payment through UPI? So he cannot make the payment through UPI because UPI is something which is there in India. So due to that reason, dynamic QR code is not applicable. Then HSN code in tax invoice. Every person who is preparing the tax invoice should mention the HSN code in the tax invoice and how many digits of HSN code. Usually HSN code is a 8-digit code. So HSN refers to harmonized system of nomenclature, which is a 8-digit code. And in that 8-digit means for every product there is a 8-digit code. But if my aggregate turnover during the previous year does not exceed 5 crores, then I need to enter 4 digits. That too in case of B2B only. In case of B2C, it is optional. But if my aggregate turnover during previous year exceeds 5 crores, let it be B2B or B2C, I need to enter 6 digits. So this is important for MCQ. My aggregate turnover during previous year does not exceed 5 crores. For B2B, 4 digits. For B2C, optional. Then if my aggregate turnover during the previous year exceeds 5 crores, for B2B or B2C, it will be 6 digits. Okay. Then see this point already I discussed, that is before issuing invoice, if we receive advance, what is the name of the document? Receipt voucher. After issuing invoice, if the payment is received, whether recipient voucher is mandatory? No. Suppose if you give the money, if you refund the amount before invoice, what is the name of the document? Refund voucher. Suppose if you have already paid tax, get the refund of GST paid. Suppose if the refund is given or supply is cancelled after invoice, what is the name of the document? Credit note. But for credit note, there is a time limit. What is that? 30th November of succeeding financial year. If I cannot give credit note, is there any alternative to credit note? Yes, I can get refund of tax under excess payment of tax. Again, I am repeating. If I can give credit note, I will reduce my liability. If I cannot give credit note, is there any alternative? Yes, option 2, refund can be claimed. So we completed fully invoice and time of supply. We will take a break. We will meet at 10 o'clock. 10:05 we will meet. Okay. Have a look into composition scheme. Practice manual discussion we will see later. Let's complete the portion first. So look into composition scheme. What's the page number? Page number 130. Please take page number 134. Page number 134, you can see composition scheme segment 8. See, composition scheme is a simplified scheme for payment of GST at reduced rates. But a person who is opting for composition scheme has got two disadvantages. What are the disadvantages of composition scheme? Person opting for composition scheme, can he take ITC? No, they cannot take ITC on inward supplies. So because of which their cost of purchase will increase. Then next, can they charge the GST what they pay under composition scheme to the recipient? No, they cannot charge GST to the recipient, because of which their profit per unit will come down. What are the two disadvantages of composition scheme? Person opting for composition scheme cannot take ITC on inward supplies. And second, so they have to pay GST out of their pocket. They cannot charge GST to the recipient. Because of this, what will happen to their profit per unit will come down. And what is the advantage of composition scheme? The volume will increase. So because I am not charging GST to my customer, so definitely the price will be less. So therefore the sales volume will increase. So because of increase in the volume, even though profit per unit is less, but the total profit will increase. That is the advantage of composition scheme. But this composition scheme, we have two types of composition scheme. Composition scheme 10.1 is applicable only to a trader, manufacturer and supplier of food service provider. So we have two composition scheme. One is under composition scheme 10.1 and another is composition scheme under 10.2a. 10.1 composition scheme is for manufacturer, trader and supplier of food service provider. Whereas 10.2a composition scheme is for manufacturer, trader and any service provider. So what is the extra that we have in case of 10.2a? So here only supplier of food, but here any service provider. Now, when composition scheme under 10.1 will be applicable? If a person, first we will discuss 10.1 and then we will see the comparison between 10.1 and 10.2a. So 10.1 is applicable if the aggregate turnover of a person during previous year, immediately preceding previous year, does not exceed 150 lakhs, and in case of 8 states it is 75 lakhs, then current year they can opt for composition scheme under 10.1. So for which states it will be 75 lakhs? So for MMTN USAM states. So what are those MMTN USAM? So 8 states. What are the 8 states for 75 lakhs limit? What are the 8 states for 75 lakhs limit? So just listen. MMTN USAM. MMTN already you know. Manipur, Mizoram, Tripura, Nagaland. U for Uttarakhand. SAM is same. That is Sikkim, Arunachal Pradesh and Meghalaya. So these are the 8 states for which what is the limit for composition scheme during the previous year? 75 lakhs. And what should be taken? Aggregate turnover we need to see. If aggregate turnover during the previous year does not exceed 150 lakhs or 75 lakhs, current year we can opt for composition scheme. While computing this aggregate turnover, we should take the same meaning of aggregate turnover that we studied in registration chapter. Extra 2 changes you need to remember. Number 1, that is interest on loans, advances, deposits is generally exempted supply, that we will include in aggregate turnover. But under composition scheme, we should not include it in the aggregate turnover. Second change is pre-registration turnover. That is before I get registered, I will make some turnover. So that turnover also I need to add while computing the aggregate turnover for composition scheme. For example, so last year I started business. Pre-registration turnover was 40 lakhs and post-registration turnover is 120 lakhs. So 40 plus 120, 160 lakhs. So current year I cannot opt for composition scheme. So what are the 2 changes that we need to make to aggregate turnover? Normal aggregate turnover definition is what? Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies, everything will come. But only 2 adjustments we need to make extra. that is interest on loans, advances, deposits will not be included in aggregate turnover, and then pre-registration turnover should be included. So that is the extra point you need to remember. Aggregate turnover will be computed on the basis of turnover on all India basis, and will include all taxable supplies, exempted supplies, exports, and a permanent account number, but it would exclude inward supply under RCM as well as taxes. Then extra, even though consideration represented by way of interest or discount on deposits, loans and advances is exempted, but it will not be considered for calculating aggregate turnover. Then next, a person who is under composition scheme 10.1 cannot render any services other than supply of food. Am I right? Because who can opt for composition scheme? Manufacturer, trader, and supply of food service provider. But if they are rendering any other services, can they be into composition scheme 10.1? Not possible. So they can provide some other services, but with a limit. What is that limit? Up to 10% of the turnover during previous year or 5 lakhs, whichever is higher, so they can provide services during the current year. For example, turnover during the previous year is 90 lakhs. 90 lakhs into 10%, 9 lakhs. 9 lakhs or 5 lakhs, whichever is higher, 9 lakhs. So current year, I can provide any other service other than supply of food and other than interest on loans, advances, deposits, up to how much? 9 lakhs, and still I will be in composition scheme 10.1. Is it clear or not? So therefore, a person opting for composition scheme under 10.1 can render services during the current year up to 10% of turnover during previous year or 5 lakhs, whichever is higher. But these services do not include interest on loans, advances, deposits. Is it clear or not? Which means what? Other than supply of food and other than interest on loans, advances, up to what extent I can provide the services? 10% of turnover during previous year or 5 lakhs, whichever is higher. For these services, what rate should be taken? We need to take the GST rate applicable to a trader. So what are the rates applicable under composition scheme 10.1? For a manufacturer, the rate will be 0.5% CGST and 0.5% SGST on total turnover. For a trader, the rates will be 0.5% CGST, 0.5% SGST on taxable turnover. For a restaurant service provider, it is 2.5% CGST, 2.5% SGST on total turnover. You can see that in differences between composition scheme 10.1 and 10.2a. So look into the benefit of reduced rates. So in case of manufacturer, what is the rate pa? 1% on total turnover. When you remember, you can remember it as 1%, but when you are writing in exam, don't write 1%, you write 0.5 CGST, 0.5 SGST, because a person who is making interstate supplies is disqualified in the composition scheme. They cannot opt for composition scheme. So 1% on total turnover in case of manufacturer, then 1% on taxable turnover in case of trader, and 5% on total turnover in case of supply of food service provider. Understood or not? And then in case of supply of services up to 10% limit. So we have the 10% limit they can provide service. Now that services will be taxable at what rate? 1% of taxable turnover means the rate applicable to a trader. Now see this carefully. There is a manufacturer. And this manufacturer, previous year 2021-22, aggregate turnover or turnover is 120 lakhs. During current year 2022-23, they opted for composition scheme, and they are engaged in supply of goods and they are engaged in supply of services. And goods, they have taxable goods. So manufacturer, previous year 2021-22, aggregate turnover or turnover is 120 lakhs. Current year 2022-23, goods. So goods again, taxable goods and exempted goods. Then they are engaged in services. So that services is 10 lakhs. Services is 10 lakhs. Goods is 120 lakhs. So current year, they provided goods 120 lakhs, services 10 lakhs. In that, taxable and exempted we have. Taxable and exempted. So, taxable goods will be 80 lakhs. Exempted goods is 40 lakhs. Taxable service is 6 lakhs. Exempted service is 4 lakhs. Compute what is the GST payable by the person opting for composition scheme. Come on. Manufacturer. Let's see who will give correct answer. What is the turnover during previous year? 120 lakhs into 10%, 12 lakhs. 12 lakhs or 5 lakhs, whichever is higher. So current year they provided services within 12 lakhs. So they will be in composition scheme only. Just we need to take the rates and multiply on the turnover and tell me what is the GST payable under composition scheme. The 130 lakhs into 1%. Wrong answer. Do. 8 lakh? 8 lakh 60,000. Wrong answer. Huh? 86,000. Wrong answer. $90,000. Have you got 90,000? No, wrong answer. 1 lakh? 1 lakh 26,000. 1 lakh 26,000 is the correct answer. So how 1 lakh 26,000? Listen, concentrate. Manufacturer will pay GST 1% on total turnover. So total turnover into 1%. Whereas for the services, they need to pay the rate applicable to a trader. Means what is that rate? 1% on taxable turnover. So when it comes to goods, 1% on total turnover. For the services, 1% on taxable turnover. So therefore, 1,20,000 and here 6,000. So therefore, 1,26,000 is the correct answer. Understood or not? Sorry. What if they are a trader? 86,000. Good. If they are a trader, on goods also they will pay on taxable turnover. For this service also they will pay taxable turnover. So 80 lakhs into 1%, 80,000. 6 lakhs into 1%, 6,000. So 86,000 will be the answer. Okay. What if they are restaurant service provider and this is restaurant services, this is other services? Calculate and tell me. No, 5% rate. So 120 lakhs mela 5%. On 120 lakhs it will be 5%. Then on 6 lakhs it will be 1%. You understood or not? So on this 120 lakhs fully 5%. But on that services it will be 1% of taxable turnover. So 120 into 5%, 6 lakhs. Then 6 lakhs into 1%, 6,000. So 6 lakhs, 6,000 will be taken as the answer. Hope you remember. 4 rates you need to remember. What are the 4 rates? Come on. Manufacturer, 1% of total turnover. Trader, 1% of taxable turnover. Restaurant service, 5% on total turnover. Up to 10% limit of services. 1% on taxable turnover. That should be taken. And then that is this, the rate applicable to a trader should be taken in that case. Okay. Next, differences between 10.1 and 10.2a. So first of all, when 10.1 will be applicable, if aggregate turnover during previous year does not exceed 1.5 crores, in case of 8 states it is 75 lakhs. But 10.2a composition scheme is applicable if aggregate turnover during the previous year does not exceed 50 lakhs. All states it is 50 lakhs only. Even for those 7 states or other states also 50 lakhs. Then to whom composition scheme 10.1 will be applicable? Manufacturer, trader, service provider, engaged in supply of food. But here manufacturer, trader, any service provider. Benefit of reduced rates. So in case of this, already we know the rates. But in case of 10 to A, it will be 6% on total turnover. 6% on total turnover. 3% CGST, 3% SGST on total turnover. Now you tell me, for a manufacturer, which is beneficial? 10-1 na, 10-2A va? 10-1, because rate is also less, limit is also high. Trader, 10-1, because rate is also less, limit is also high. Service provider in supply of food, 10-1, because rate is also less, limit also high. Then to whom 10-2A is applicable? Other than supply of food. Service providers other than supply of food, or listen, or they are under 10-1, but they provided any other service beyond the 10% limit, then also they can come for 10-2A. You understood or not? So to whom 10-2A is applicable? Come on. Service provider other than supply of food, or composition scheme 10-1, but they have rendered services beyond 10% limit during the previous year, then they will be coming into 10-2A, because in 10-2A no limit for services na, so under 10-2A. But 10-2A the limit is less. So previous year aggregate turnover should not exceed 50 lakhs, and current year they will pay GST at 6%. That is 3% CGST, 3% SGST. Now current year up to what limit they will be into composition scheme? Under 10-1 same 150 lakhs or 75 lakhs. In case of 10-2A 50 lakhs. For example, previous year my aggregate turnover is 120 lakhs. So current year I opted for composition scheme. Current year up to 150 lakhs I will be into composition scheme. After crossing 150 lakhs I will go into normal scheme. Same way 10-2A the limit will be 50 lakhs. And what are those 8 states for which 75 lakhs is applicable? Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, Sikkim, Arunachal Pradesh and Meghalaya. Then who cannot opt for composition scheme under 10-1? 10-1 composition scheme is not applicable in few cases. You remember that as S9 RCM. Section 9 is RCM na? Yes, 9 RCM. Section 9 RCM. Okay. Yes for supply of services other than supply of food or beyond 10% limit. So they cannot be into 10-1, correct? Other than supply of food or beyond 10% limit of service, they will not be into composition scheme. Whether we need to check this S9 RCM for current year or previous year? Current year. Current year only you are opting for composition scheme. Current year you should not be covered in this. For example, if you see N, non-resident taxable person cannot opt for composition scheme. So a person was NRTP last year, but this year he is not NRTP, normal person. Can he opt for composition scheme? Yes, because last year we don't have to see. Current year. Last year you may be covered under this disqualification, irrelevant. Current year, when you are into composition scheme, you should not be covered into this list. Is it clear or not? So previous year I made some services, it's okay, irrelevant. Current year, when you are under composition scheme, you should not render any service other than supply of food or beyond the 10% limit allowed. Then N, non-resident taxable person. I, that is interstate supply of goods or services. So previous year can I make interstate supplies? No problem. Current year, when you are in composition scheme, you should not make interstate supplies. That's the reason why I asked you to remember the rates as 0.5 CGST, 0.5 SGST or 2.5 CGST, 2.5 SGST, because you should not have interstate supply. If you are having interstate supply, that moment onwards, you are disqualified from the composition scheme. Then, non-taxable supplies means what? For example, there is a restaurant. Restaurant is selling liquor, bar and restaurant. So, restaurant is having license to sell liquor. Generally, being a restaurant, they can opt for composition scheme under 10-1. But as they are selling liquor, can they opt for composition scheme? No. Why? Because liquor is a non-taxable supply. A person making non-taxable supplies cannot opt for composition scheme. Can they make non-taxable supplies previous year? Yes. Again, I am repeating, all these restrictions are for the current year, not for the previous year. Then, supply of goods or services through e-commerce operator. So in case of supply of goods or services through e-commerce operator, then also composition scheme is not applicable from that. Then inward supplies on which GST payable under RCM under section 9.4, that is under section 9.4. So what is 9.4 composition, 9.4 RCM? Promoter or builder. So promoter or builder cannot opt for composition scheme. Logical pa, because promoter or builder, by selling one flat itself, they will get 1.5 crore. You understood or not? So therefore, definitely promoter or builder will not come into composition scheme. So therefore, inward supply on which GST payable under RCM 9 subsection 4. Then casual taxable person. Casual taxable person, same way. Who come from other state to this state, he cannot opt for composition scheme during current year. Then manufacturer of certain notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products. Extra we have aerated waters, then bricks and roofing tiles. This aerated waters is actually raw material for beverage industry. Beverage industry like this sodas. So Pepsi, Coke or any soda etc. They purchase these aerated waters and they mix the essence in that. That's where they make the beverages. So this manufacture of these aerated waters, these are processed waters. So with which we add sugars and the oxygen into it. So these aerated waters are processed water, not normal water. So that manufacturer cannot opt for composition scheme. Then bricks and roofing tiles. Is this notified goods manufacturer or supplier? Manufacturer. For example, there is an ice cream shop which is selling ice cream. Can they opt for composition scheme? Yes. Only a manufacturer of these notified goods cannot opt for composition scheme. But in registration chapter, we discussed, let it be manufacturer or supplier of those notified goods will not get 40 lakhs limit. What is the difference between notified goods there and here? That aerated waters is not there for registration, but it is there for composition scheme. And composition scheme we need to check manufacturer, but there any supplier. Okay, so trader of these notified goods. I am trading in bricks and roofing tiles. Can I opt for composition scheme? Yes. Now tell me what is this S9 RCM? Come on, yes for supply of services other than supply of food or beyond 10% limit. N. Non-resident taxable person, NRTP. Okay, I. Interstate supply of goods or services. Another N. Non-taxable supplies. Then E. E-commerce operator, that is supply of goods or services through e-commerce operator. Then S9 over. R for RCM. Which section? 9.4. Then C. Casual taxable person. M. Manufacturer of notified goods. Okay. In case of 10.2a also, same list is there except S. It is only NINE RCM, 9 RCM. So why? Because under 10.2a, they can render any services. Na? Under 10.2a, there is no restriction. They can render any services. So above restrictions are applicable for 10.2a, except that they can provide any services. So therefore, the list is 9 RCM. Understood the difference between 10.1 and 10.2a? Now, how to opt for composition scheme? So if you are already a registered person, you need to wait till commencement of the financial year. Before commencement of the financial year, you need to give an intimation to opt for composition scheme, that is CMP2, before commencement of the relevant financial year. Suppose if you are getting newly registration, now only you are getting registered, no need to wait till beginning of the financial year. Anytime you can make registration application. In that registration application itself, you can select opt to pay composition scheme. Is it clear? That is, if I am newly registered person, then so anytime I can go into composition scheme. And for that, what is the form? No separate form. Our registration application itself we can select. Suppose if I am already registered as a normal taxpayer, now I need to go into composition scheme. I need to wait till commencement of the financial year. Then before commencement of the financial year, I will give a intimation, that is in CMP2, for entry into the composition scheme. Then other provisions, relating to composition scheme. So they have to display composition taxable person on every notice and signboard displayed at the principal place of business, additional place of business. That is in the board, name board, they should mention that they are under composition scheme. And validity of composition levy. If all the conditions are satisfied, composition scheme is valid. Every year we don't have to give intimation. Suppose if the conditions are not satisfied, then say for example you are making interstate supply or you are making supply through e-commerce operator or any other case, then you need to give a intimation in CMP 4 to exit from the composition scheme and you need to come out of the composition scheme. CMP 2 is for entry into composition scheme. CMP 4 is for exit from composition scheme. Understood? CMP 2 entry, CMP 4 exit. And what is the time limit within which you need to exit from the composition scheme? 7 days. So if the conditions are not satisfied within 7 days, file GST CMP 4 as an intimation and come out of composition scheme. Self-withdraw, voluntarily at any time you can come out of the composition scheme. There is no restriction. And why you voluntarily come out of the composition scheme? Maybe your turnover is not as expected. So you did not have increase in the sales volume. The price, even though reduced, the volume remained the same. So then composition scheme is not beneficial for you. So you are coming out of the composition scheme. Then if you breach the conditions and still you are continuing in the composition scheme. For example, you made interstate supply or you made supply through e-commerce operator, which means you are disqualified from the composition scheme. But you should come out, but you did not come out. You continue. Department identified. When department identified, first they will give a notice in CMP 5. After giving notice, we need to give reply to the notice within 15 days in CMP 6. And after that 15 days reply, so thereafter within 30 days, they will decide either allowing us to continue in the composition scheme or denying the composition scheme. Is it clear? So, what is that? First we have breached the condition, but still we continued in the composition scheme. We will get a notice in CMP 5. Time limit, no time limit. Thereafter reply to notice within 15 days. And after reply within 30 days, they will either pass an order to allow us in the composition scheme or rejecting the composition scheme. Remember, when you come out of the composition scheme and go into normal scheme, we have 18(1)(c). We can avail the ITC on closing stock. Do you remember? For that we will file one form. What is that? ITC 1. Form GST ITC 1 within 30 days of intimation to avail the ITC on closing stock. So, which two forms are combination here? CMP 4, exit from the composition scheme, plus ITC 1. Understood? Wherever CMP 4 comes, ITC 1 will come there. Okay. Then, next, is this denial of composition scheme prospective or retrospective? For example, you committed a breach and say you committed breach on 30th of September this year. So 2022 you committed the breach. Okay. Now thereafter department identified sometime in the next financial year 2023. Now they are giving a notice and they are passing an order. Order they are passing in which year? 2023. They can deny the composition scheme either prospectively, means 2023 onwards, or they can deny composition scheme retrospectively, but not before 30th September, not before the date we committed the breach. Is it clear? So read that point. The effective date of such denial shall be from a date including any retrospective date as may be determined by the tax authorities. However, such effective date shall not be prior to the date of contravention of the provisions of Act or rules. Okay. Then, issue number 1, A Limited is doing business in Tamil Nadu, Andhra Pradesh and Karnataka. Now, for few states composition scheme, few states normal scheme. Is it possible? No. All in or all out. Means all registrations will be into composition scheme or all registrations into normal scheme. Mix and match is not possible. Then issue number 2. Aggregate turnover during previous year is 80 lakhs. They are doing business in Tamil Nadu and Nagaland. What will be the limit? 75 lakhs. In Tamil Nadu, what is the limit? 150. But in Nagaland, what is the limit? 75. So overall, we need to take 75 lakhs only limit. So therefore, what is the aggregate turnover during the previous year? 80. So it crossed 75. So they cannot opt for composition scheme. So when you are doing business in normal state and those 8 states, then automatically the limit should be taken as 75 lakhs only, not 150 lakhs. Then next, overview of the forms involved. This is what I told you. Whenever you file CMP4, you need to take ITZ. So therefore ITZ1, this will be one combo. Understood? ITZ1 for what? Availment of ITZ on closing stock. CMP4 is for what? Exit from the composition scheme. Then whenever you go into composition scheme from normal scheme, you need to reverse the ITZ on closing stock. Do you remember 18 subsection 4? For reversal of ITZ, we will file one form, that is ITZ3. So CMP2 and ITZ3 is one combo. Understood? That is, whenever we enter into composition scheme, we need to reverse the ITZ. For reversal of ITZ, we need to file ITZ3. So CMP2, entry into composition scheme, combination ITZ3. Then whenever you are exiting from the composition scheme, CMP4, now you are going into normal scheme, so you will avail the ITZ on closing stock, therefore ITZ1. Then CMP5, a notice. CMP6, reply to notice. CMP7, order. CMP8 is there, that is written. So the return to be filed by a person opting for composition scheme is form GST CMP8, and that return needs to be filed within 18 days from the end of the quarter. So 18th of the month following every quarter. So composition scheme dealer will file returns on monthly basis or quarterly basis? Quarterly basis. And the tax also will be paid on a quarterly basis. By when? 18th of the month following every quarter. Then meaning of various turnovers. In this entire composition scheme, we have come across 3 turnovers. That is aggregate turnover for determining the eligibility to opt for composition scheme. Then second turnover is turnover for computing 10% limit. And third turnover is turnover for payment of GST under composition scheme. Okay. Now we are trying to identify the differences between these 3. So what are the 3 turnovers that we have come across? Number 1, turnover for determining the eligibility to opt for composition scheme. What turnover it is? Aggregate turnover. Then second one is turnover for computing 10% limit. Third one is turnover for payment of GST under composition scheme. Now aggregate turnover, we need to check current year or previous year for determining the eligibility. Previous year. Then next, for computing 10% limit, should we take current year turnover or previous year turnover? Previous year turnover. Then for payment of GST under composition scheme, should we take current year turnover or previous year turnover? Current year turnover. Understood? Then aggregate turnover will always be computed on a all India basis, but turnover is computed state-wise or union territory wise. For example, see this question. During the previous year 2021-22, I was having business in Tamil Nadu, Karnataka and Andhra Pradesh. In Tamil Nadu 60 lakhs and in Karnataka 30 lakhs and in Andhra Pradesh 40 lakhs. So this was my turnover and total was 130 lakhs. And current year 2022-23, can I opt for composition scheme? Yes, I can opt for composition scheme because previous year composition scheme 10-1, because previous year my aggregate turnover does not exceed 150 lakhs. Now current year, what is the extent up to which services can be provided? Services provided up to. So 10% of turnover during previous year, that is 130 lakhs into 10%. How much? 13 lakhs or 5 lakhs, whichever is higher, 13 lakhs. Absolutely wrong answer. Because we should compute turnover always on a state or union territory wise, which means in Tamil Nadu, 60 lakhs into 10%, 6 lakhs or 5 lakhs, whichever is higher. So we can provide service up to 6 lakhs in Tamil Nadu. Then Karnataka, 30 lakhs into 10%, 3 lakhs or 5 lakhs, whichever is higher. That will be 5 lakhs. And in Andhra Pradesh, 40 lakhs into 10%, 4 lakhs or 5 lakhs, whichever is higher. That is 5 lakhs, which means to what extent we can provide the services during the current year? 16 lakhs. So in MCQ, they will give 13 lakhs, 16 lakhs. We will say 13 lakhs only. Why? Because 130 lakhs into 10% like that. But be careful. 10% limit should always be computed on state-wise. So therefore, we need to take this. It means in Tamil Nadu, we cannot render service more than 6 lakhs. In Karnataka, not more than 5 lakhs. In Andhra Pradesh, not more than 5 lakhs. Suppose, if you are rendering more than 6 lakhs in Tamil Nadu, but overall 16 lakhs, then are you eligible to continue in composition scheme? No. You are disqualified in Tamil Nadu. The moment you are disqualified in Tamil Nadu, you are also disqualified in other states, because all in, all out. Once you are exiting from composition scheme in one state, you need to exit from the composition scheme for all states. Understood? Then next one. Next, what is the general meaning of aggregate turnover for determining the eligibility to opt for composition scheme? Whether taxable supplies will be taken? Yes. Exempted? Yes. Interest on loans advances? No, that will be excluded. Non-taxable supplies? Yes. Exports? Yes. Interstate supplies? But sir, you should not have interstate supplies. Previous year, no issue. Current year only, I should not have non-taxable supplies or interstate supplies. Then, inward supply under RCM excluded. Taxes excluded. Pre-registration turnover should be included. This is what I told you. Pre-registration turnover we need to include. So, these are the 2 extra points in aggregate turnover. Now, see the difference between aggregate turnover for determining eligibility to opt for composition scheme and turnover. Both are same, ditto, correct? Same, except one. What is that? Aggregate turnover is computed on a all India basis. Turnover for computing 10% limit is on state-wise. But apart from that, everything else is same, correct? So therefore, what is the difference between aggregate turnover for determining eligibility and turnover for determining 10% limit? Aggregate turnover, A for all India basis, A for A. Aggregate turnover, all India. Turnover, no all India, only state-wise. Then, what is the turnover for payment of GST under composition scheme? Current year we need to see, basis will be state-wise, but you should not have non-taxable supplies. You should not have exports and you should not have interstate supplies. Why? S9 RCM restriction. Current year if you are having non-taxable supplies, current year if you are having interstate supplies, you are disqualified from the composition scheme. And one more difference also, pre-registration turnover is excluded. Pre-registration turnover is excluded. Now say this. What does that mean? That is, your previous year 2021-22, your aggregate turnover is 0. Means you did not have any business in the previous year. Current year 2022-23 only, you commence the business and you are into composition scheme. And during the current year 2022-23, your aggregate turnover, so your aggregate turnover is, so first up to 40 lakhs you did not register. Up to 40 lakhs you did not register. Thereafter you registered and overall it went to 180 lakhs. 180 lakhs. Okay. So what is your aggregate turnover? 180 lakhs. Now if you are under composition scheme, how much turnover will be under composition scheme? Yeah, you are under composition scheme. Up to what limit you will be in composition scheme? 150 lakhs. Means this 180 lakhs we will divide into 2. 150 lakhs and 30 lakhs. So 150 lakhs you will be in, 30 lakhs you will be in. In this 150 lakhs, take out 40 lakhs pre-registration turnover. On that no need to pay GST. Is it clear? So 150 lakhs turnover you will be in composition scheme. In this 150 lakhs turnover, take out pre-registration turnover, because before registration you are not required to pay GST. So the balance is 110 lakhs. On this 110 lakhs only we need to pay tax under composition scheme. So when you compute the GST under composition scheme, you need to exclude pre-registration turnover. So therefore, this 40 lakhs needs to be excluded. Understood or not? So GST payable under composition scheme on what turnover? 110 lakhs. Under normal scheme on 30 lakhs. So that is about this. And some illustrations based on this. Have a look into that. During 2019-20, a person commenced business, and on 24/7/2019, his aggregate turnover exceeds 40 lakhs and he got registered. Post registration, the aggregate turnover is 130 lakhs up to 31/3/2020. Whether this person is eligible for composition scheme during 2020-21. So during 1920, how much his aggregate turnover exceeded? 40. Thereafter he registered, and post registration his aggregate turnover is 130. Now can he opt for composition scheme during the current year? What is the previous year aggregate turnover? Should we include pre-registration turnover? Yes. While determining the aggregate turnover for eligibility to opt for composition scheme, pre-registration turnover should be included. So therefore, here that 40 lakhs we need to add 130 lakhs plus 40 lakhs, 170 lakhs, which exceeds 150 lakhs. So current year they cannot opt for composition scheme. Understood, pa? This is how they will be testing in MCQ. Then, illustration 2, a person's aggregate turnover during previous year 2021 is 120 lakhs and opted for composition scheme during current year. He wants to render services other than restaurant during current year. Determine the limit up to which services can be rendered based on following facts. So that is, previous year such person commenced business and threshold limit is 20 lakhs and post registration turnover is 100 lakhs. So right now we need to compute what? He determined the limit up to which services can be provided. So 10% of turnover during previous year or 5 lakhs, whichever is higher. While counting turnover, should we include pre-registration turnover or not? Yes. For determining this 10% limit, pre-registration turnover should be included. So should we include this 20 lakhs or not? Yes, we should include. So 120 lakhs. Then next one, interest income during previous year 40 lakhs, out of which interest on loans advances 30 lakhs and balance is on account of delay in receipt of consideration. Whether this 30 lakhs should be taken in turnover or not. So interest on loans advances should be excluded. Correct or not? So therefore take 120 lakhs and in this 120 pre-registration turnover should be included and it is already included and interest should be excluded. So 120 minus 30, 190 lakhs, 120 minus 30, 90 lakhs. So 90 lakhs into 10%, 9 lakhs or 5 lakhs, whichever is higher. Therefore current year they can provide service up to 9 lakhs. See this particular illustrations, illustration 1, 2 and 3, these illustrations are not yet tested in exam. So these kind of questions can easily come because composition scheme regular type of questions already asked. These are some areas which they can ask because not yet tested in exam. Then illustration 3, a person commenced business during current year 2020-21 and on 18/8/2020 his aggregate turnover exceeds 40 lakhs and got registered under composition scheme. He is into trading within the state and the aggregate turnover during current year 2021 is 200 lakhs. Compute GST payable if applicable rate of GST is 12%. What is the total turnover during the current year? Total turnover during the current year, 200 lakhs. Easily we can do, concentrate pa. 200 lakhs you divide into 2. 150 lakhs under composition scheme. Remaining 50 lakhs under normal scheme. So on that 50 lakhs, we need to pay GST at 12%. So 50 lakhs, we need to pay GST at 12%. So that is 6 lakhs. Understood? Now 150 lakhs. In that 150 lakhs, what is pre-registration turnover? 40 lakhs. Should we exclude pre-registration turnover while computing GST under composition scheme? Yes. So therefore, 150 minus 40, how much? 110 lakhs. On that 110 lakhs, what will be the rate? They are trader. So trader will be 1%. So 110 lakhs into 1%, 1 lakh 10,000. So therefore, this will be taken as the liability. Understood pa? First 40 lakhs, no GST. Next to 110 lakhs, 1%. Thereafter 50 lakhs, 6%. Okay? So these are the illustrations, very, very important illustrations that you can expect in exam, that is May 23, because these kind of questions not yet tested, even in MCQ as well as in descriptive questions. Okay? So with this we completed composition scheme pa. Then one more point, suppose if you are under composition scheme and you are having some inward supplies, on that inward supplies we have to pay GST under RCM. We are under composition scheme. On that inward supplies, should we pay GST under RCM at the rate applicable to composition scheme or the rate applicable to RCM? For example, I am a trader pa. I am under composition scheme. What is the rate applicable to me? 1% on taxable turnover. I am making some inward supplies on which generally I need to pay 5%. Now should I pay 5% or 1%? 5%. Please write down below this note. Person opting for composition scheme under section 10(1) or 10(2)(a), person opting for composition scheme under 10(1) or 10(2)(a) should pay GST under RCM, should pay GST under RCM on inward supplies, at normal rates. Person opting for composition scheme under 10(1) or 10(2)(a) should pay GST under RCM on inward supplies at normal rates. Understood? Then, so we have seen composition scheme, and in that composition scheme, we will see some more questions. So from the practice manual, just to get the confidence on that. So please take your practice manual. And I'll give some 2 minutes time. Those who wanted to leave, take your bags and leave pa. You are coming to the class, but when you are leaving in the middle, I feel insulted pa. So really, I am not at all happy about that. I don't like that also. So a request to all of you with good note, no hard feelings. If you want to take the bag and leave, you can leave now itself. I'll give you some 2 minutes time. If you want to sit in the class and go in the break. In a class நடக்கும்போது அப்படியே பேக் எடுத்து எழுந்திச்சு போனா ஒரு ஃபேக்கல்ட்டி கொடுக்குற அது ஒரு அவமரியாதைப்பா, அது ஒரு இன்சல்ட். அது உங்களுக்கு தெரியாது, நீங்க இங்க இருக்கும்போது உங்களுக்கு தெரியும். So because one person is taking class and suddenly you take your bag and leave, அவ்வளோ பெரிய புடுங்குற வேலை என்னன்னு தெரியலப்பா எனக்கு. ஓகே, அண்ட் இஃப் யூ ஆர் டேக்கிங் பேக் அண்ட் லீவிங், நோ, தட் இஸ் இன்சல்ட். அ பிரேக் ஒன்று கிடைக்கும், அந்த பிரேக்ல போகலாம். மார்னிங் வராங்க நிறைய பேர், ஸோ அது எதுக்காக வராங்கன்னே தெரியல. ஸோ தே வில் கம் and 2 hours they are sitting, and breakfast break up they should have left. But after when I started class, they are taking bag and leaving. So that won't be good, na. So see, correct. And you, even though I am not collecting any fees from you, but I am giving respect to you, na. 1 minute I sat and took classes. Chair kuda potna edukalepa. Morning to evening, I am standing and I am taking class. Even in the break only, I am also drinking water. I did not drink water also. I am taking class. So this is the respect that I am giving to you. So what is the respect that you should give to a teacher? Not just me. Any teacher for that matter is simple respect. That is, when the class is going on, we should not just like that take our bag and leave. That is not a good sign. But if you are going for toilet, understandable. So fine. So maybe you want to go and have some water or go for toilet, that is fine. But when you are taking bag and leave, then why did you come to the class? You understood what I am telling? So that's why if you want to leave, no problem. Now itself you take your bags and leave, or wait till lunch break. Lunch break you can go. Okay. After lunch break, when lunch break is over, I am taking class, again sit for 1 hour. So 3 o'clock, thereafter you go. But in between, please don't leave. That won't be good, pa. You understood? I will not like that. That's why I am requesting you, don't do that. Okay, fine. So page number 146. See that first MCQs we will complete. Exxon Company, a registered supplier of Meghalaya, wants to opt for composition levy under section 10(1). The turnover limit for the composition levy is Meghalaya. Meghalaya is in MMT and USAM. Yes. So what will be the limit? 75 lakhs. So 75 lakhs will be taken as the limit. Then next, CN Company, a registered supplier in Delhi, opted for composition levy under 10(1). It sold goods in the 4th quarter of a financial year for 15 lakhs exclusive of GST. The applicable GST rate on these goods is 12%. CN Company purchased goods from Ramesh and Company, registered in Delhi, for 9,55,000, on which Ramesh and Company has charged CGST of 57,300 and SGST 57,300. So this is the GST paid on inward supplies. CN Company has also purchased goods from EN Company, registered in Haryana, for 2,46,000, on which EN Company has charged IGST of 29,520. So what is the GST liability of CN Company for the 4th quarter? Actually, can they take ITC on inward supplies? No. Then this information is of no use. So they are purchasing from a person, pay GST, irrelevant, because a person opting for composition scheme cannot take ITC on inward supply. Now what is their outward supplies? It sold goods in the 4th quarter in a financial year for 15 lakhs, and they are trader or manufacturer. Trader, sold goods, trader. So being a trader, they will pay GST at 1% on taxable turnover. Here they did not give any exempted turnover, so entirely taxable turnover. 15 lakhs into 1%. What is that? So that is 7,500 CGST and 7,500 SGST. Then next, which one of the following not eligible for opting composition scheme under 10(1) of CGST Act? ABC, a firm selling garments in Ahmedabad, having annual turnover of 78 lakhs. So they can opt a trader turnover during the previous year does not exceed 150 lakhs. Ahmedabad, Gujarat, the limit is 150 lakhs. So can they opt for composition scheme? Yes. Then a startup company operating restaurant, supply of food, in Delhi having an annual turnover of 98 lakhs, 150 lakhs. Can they opt for composition scheme? Yes. A courier service company, courier service means service provider, operating solely in Mumbai, having annual turnover of 90 lakhs. For a service provider other than supply of food, which composition scheme? 10-2A. 10-2A. So what is the limit? 50 lakhs. But here it is how much? 90 lakhs. So they cannot opt for composition scheme. A trader selling grocery items in Orissa having an annual turnover of 95. Selling means trader. So trader Orissa, the limit will be 150 lakhs. Here it is 95 lakhs. So they can also opt for composition scheme. So answer is C. Then 4. Which of the following persons is not eligible for composition levy under section 10(1) of CGST Act, even though their aggregate turnover does not exceed 1.5 crores. A person supplying restaurant service, eligible. A person supplying restaurant service and earning bank interest, eligible. A person trading in ice cream, eligible. Trading, not manufacturer, eligible. A person supplying service of repairing of electronic items under 10(1), a service provider other than supply of food cannot opt for composition scheme. So option D. Then, can a registered person opting for composition scheme collect GST on his outward supplies? Yes or no? No, they cannot collect. One of the restriction under composition scheme is that. That's the reason why they need to give one document. What is that document? Tax invoice or bill of supply? Bill of supply. Look into this question number 1. Sultan and Sons, a partnership firm in Nagpur, Maharashtra, is a wholesaler of a taxable product P and product Q exempted by way of a notification in the state of Maharashtra. Its aggregate turnover in the preceding financial year is 130 lakhs. The firm wishes to opt for composition scheme under subsection 1 and 2 of section 10. However, its accountant is of the view that a person engaged in making supply of exempted goods is not eligible for the said scheme. Is there any restriction that a person engaged in making exempted supplies is not eligible for composition scheme? No. So, only a person who is making non-taxable supplies cannot opt for composition scheme. And that too, so previous year they are engaged in trading and previous year turnover does not exceed 150 lakhs. Maharashtra, the limit is 150 lakhs. It does not exceed 150 lakhs. So current year they can opt for composition scheme. Therefore, it is eligible for composition scheme in the current year. Then next, a person availing composition scheme under 10(1) of section 10 in Haryana during a financial year crosses the turnover of 1.5 crores, that is 150 lakhs in the month of December. Will he be allowed to pay tax under composition scheme for remainder of the year? No, because the moment he is crossing 150 lakhs, where is he located? Haryana. In Haryana, what is the limit? 150 lakhs. The moment he is crossing 150 lakhs, he is disqualified from the composition scheme. So therefore, he need to pay tax under normal scheme. And what is the time limit within which he need to come out of the composition scheme? 7 days. 7 days. 7 days he need to file CMP4 to exit from the composition scheme. Then, whenever he exits from the composition scheme, what will be the ITZ to him? Under section 18(1)(c), he can avail the ITZ on closing stock. Then next, question number 3, determine whether the suppliers in the following cases are eligible for composition levy under section 10(1) and 10(2), provided their turnover in the preceding year does not exceed 1.5 crores. Mohan Enterprises is engaged in trading of pan masala. Trading. Eligible or not eligible? Eligible. Sugam Manufacturers has registered office in Punjab and Haryana and supplies goods in neighboring states. Means what? They are making interstate supply. Eligible or not eligible? Not eligible. Then Subramanian Enterprises has 2 registered place of business in Delhi. Its aggregate turnover for the preceding year for both the place of business was 120 lakhs. It wishes to pay tax under composition levy under 10(1) and 10(2), for one of the place of business in the current year, while normal levy for the other. So all registrations of the person will be into composition scheme, or all registrations will be into normal scheme, but not both, correct? Then question 5, Messrs. United Electronics, a registered dealer, is supplying all types of electronic appliances in the state of Karnataka. Their aggregate turnover in the preceding financial year by way of supply of appliances was 120 lakhs. The firm also expects to provide repair and maintenance service. So they want to start repair and maintenance service. So whether the firm can opt for composition scheme? Yes. Because their aggregate turnover during the previous year does not exceed 150 lakhs. Because Karnataka, the limit will be 150 lakhs. So current year they can opt for composition scheme. If yes, up to what amount the services can be supplied? They can render repair and maintenance service up to 10% of turnover during previous year. That is 120 lakhs into 10%, 12 lakhs or 5 lakhs, whichever is higher. Therefore, they can render services up to 12 lakhs. Then next, question number 6. Examine in relation to composition levy scheme under CGST Act and the rules made thereunder in the following individual cases. Ketu is a manufacturer of ice cream and pan masala in the state of Maharashtra. His turnover, manufacturer of ice cream, his turnover for the year does not exceed 1.5 crores. Eligible or not eligible? So manufacturer of notified goods cannot opt for composition scheme. Then Jadu of Gujarat opts for composition scheme during a financial year, but on 10/2 his turnover crosses 1.5 crores. So can he continue in composition scheme? No, he cannot continue in composition scheme because the limit is crossed. X Limited has 2 branches, K and L in Delhi, having same permanent account number. Branch K normal scheme and another branch composition scheme. Is it possible? No, all in, all out. Then question number 7, Messrs. Sai Trading Company, an eligible registered dealer in goods making intrastate supplies within the state of Andhra Pradesh, has reported an aggregate turnover of 78 lakhs in the preceding financial year. Goods. They are located where? Andhra Pradesh. They are engaged in supply of goods. So what is the limit? 150 lakhs. So their turnover does not exceed 150 lakhs in the preceding year. So can they opt for composition scheme during current financial year? Yes. Will your answer be different if the company is making intrastate supply within the state of Sikkim? Yes. For Sikkim, MMTN USAM, the limit will be 75 lakhs as the aggregate turnover during the previous year exceeds 75 lakhs. So current year they cannot opt for composition scheme. Then question number 8, Messrs. Handsome and Like Me Company, a partnership firm at Mumbai, is running a mobile phone showroom. So trader. Along with mobile phone, it is also engaged in providing health and fitness services. They can, but 10% limit we need to check. Turnover of the mobile phone showroom was 78 and receipts of health and fitness service was 26 lakhs in the preceding financial year. So what is the turnover during previous year? 78 plus 26. So 104 lakhs. 104 lakhs into 10%, that is 10.4 lakhs worth of service only they can provide during the current year. Then they will continue into the composition scheme. With reference to the provisions, examine whether firm can opt for composition scheme. So they cannot opt for composition scheme because if their turnover during the current year by way of supply of service exceeds 10.4 lakhs. So that they need to know, because already last year itself it was 26 lakhs. So current year, if they ensure that, they should ensure that. Don't write yes or no. Here we cannot write both. Yes or no, both are wrong. So we need to write the condition. They need to ensure that their turnover is not crossing 10.4 lakhs with respect to services during the current year. Then they can be into composition scheme. Understood? So if the turnover of service does not exceed 10.4, then they will be into composition scheme. Then next, the second, will your answer change if the turnover of the mobile phone showroom was 74 and receipts of health and fitness service is 18 lakhs? 74 plus 18 is what? 92 lakhs. 92 lakhs into 10%, 9.2 lakhs. Again, same way you need to write. If their turnover by way of supply of service does not exceed 9,20,000, then they can be into composition scheme. Then next, third, if Messrs. Handsome and Like Me Company obtain separate registration for their mobile phone showroom and for health and fitness center, can it opt for composition scheme only for mobile phone showroom? No, because other registration also should be into composition scheme. Not possible. Then question number 9, Miss Chenchal started providing beauty and grooming services and inaugurated Care and Care Beauty Center in Janakpuri, Delhi on 1st April. She opted to pay tax under 10(2)(a) in the said financial year. The aggregate turnover of Care and Care Beauty Center for the quarter ending 30th June was 20 lakhs. Further, for the half year ending 30th September, the turnover reached 50 lakhs. So, therefore, aggregate turnover by 30th June was 20 lakhs. This year only, they started business. So, means first 20 lakhs they will not register. Thereafter, turnover reached 50 lakhs. Means next 30 lakhs. On the 30 lakhs, they will pay GST under composition scheme. What rate? 10(2)(a), 10(2)(a), 6%. So, 30 lakhs into 6% of 50 lakhs into 6% of 30 lakhs. Why? Because composition scheme turnover is 50. While paying GST under composition scheme, we need to take out pre-registration turnover. What is a pre-registration turnover? 20 lakhs. So, 50 lakhs minus 20 lakhs, 30 lakhs. On the 30 lakhs, how much is 6%? So, 1,80,000 they need to pay for second quarter. Understood? Next again. Thereafter, so 70 lakhs they reached. So, already 50 over. Now, what is remaining? 20. On the 20, can they pay tax under composition scheme or they should pay under normal scheme? Normal scheme, and the rate is 18%. So, on this 20 lakhs, 18%, that is 3,60,000. Understood? Then B, Care and Care Beauty Center wishes to opt for composition scheme from the next financial year. You are required to advise it whether it can do so. Current year it crossed 50. Current year how much? 70. Current year how much? 70. It crossed 50. So, next year can they opt for composition scheme? No. Mark this question as very, very important. Question number 9. Then question number 10. Mr. Ajay has registered repair center where electronic goods are repaired or serviced. His repair center is located in the state of Rajasthan and he is not engaged in making any interstate supply of services. So, service provider means which composition scheme? 10(2)(a). His aggregate turnover in the preceding financial year is 45 lakhs. With reference to the provisions of CGST Act, examine whether Mr. Ajay can opt for composition scheme in the current financial year. Yes, because previous year aggregate turnover does not exceed 50 lakhs. So, current year they can opt for composition scheme. Is he eligible to avail benefit of concessional payment of tax under 10(2)(a)? Yes. Considering the option of payment of tax available to Ajay, compute the amount of tax payable by him, assuming his aggregate turnover in the current financial year is 35 lakhs. So, previous year it does not exceed 50. So, current year they are opting for composition scheme. Current year, up to what limit they will be in composition scheme? 50. So, that does not exceed. So, on the 35 lakhs, what will be the rate of GST? 6%. So, that is 3% CGST, 3% SGST. So, that will be 2,10,000. Clear? And next part, will your answer be different if Ajay procures few items required for providing repair service from neighboring state Madhya Pradesh? So, they are making interstate purchases. Can they continue in composition scheme? Yes. Yes. They should not make interstate supplies. Means they should not make interstate supply of goods or supply of service, outward supply. But inward supply they can be having interstate, no restriction. Then question number 11, Mr. Jafar of Assam provides you the following information for the preceding financial year 18-19. You are required to find out the aggregate turnover for the purpose of eligibility of composition scheme and determine whether he is eligible for the composition levy or not. Now, take this and tell me what is the aggregate turnover. What is the aggregate turnover of that person? Value of outward supplies. Out of above, 10 lakhs was in the course of interstate. Should we take everything? Yes. Previous year 18-19, they can have anything. Current year only, they should not have interstate supply. First of all, see the question. It is about determining the eligibility to opt for composition scheme. So previous year they can make interstate supplies, previous year they can make non-taxable supplies, anything. So previous year it can be there, it should be taken in aggregate turnover. But current year they should not make interstate supplies. Current year is 19-20. This data given is for current year or previous year? Previous year. Now, should we take entire 50 lakhs in aggregate turnover? Yes. Value of exempt supply, which includes 30 lakhs as interest on loans advances. Whether interest on loans advances will be taken aggregate turnover for composition scheme? No. In all places in composition scheme, turnover, we will exclude interest on loans advances deposits. So therefore, how much should be taken in aggregate turnover? 40 lakhs. Then, value of inward supply on which he is liable to pay tax under reverse charge. So whether it will be taken in aggregate turnover? No. Value of exports, will it be taken aggregate turnover? Yes. 50 plus 40, 90 plus 5, 95. So their turnover does not exceed 150 lakhs because they are located in Assam. For Assam, what is the limit? 150 lakhs. As their turnover during the previous year does not exceed 150 lakhs, so current year they can opt for composition scheme. Understood? Then examine whether the following statements are true or false, giving brief reasons. It is mandatory to issue a tax invoice in case of a registered person has opted for composition scheme. True or false? Why? What is the name of the document? Bill of supply. A composition taxpayer who has not rendered any taxable supply during a quarter is not required to file any return. No. They need to file return. What is that? CMP 8. At least nil return they need to file by 18th of the month following every quarter. And there is a facility of filing nil return through SMS. So GSTR 1, GSTR 3B and CMP 8. These three returns, if it is nil, nil means what? There are no amounts in that return, but we need to file that return. So that return can be filed even through SMS also. Just we can type SMS, GSTIN of the person and which period they are filing the return, and they can send a SMS to one number which is provided, so that is deemed as return has been filed. Then, so these are the questions on composition scheme. So please look into, so payment process. We are left with two areas, that is payment process and returns. Take page number 161, segment 10. I will give break at 12:45. 12:45 I will give break. You take break up to 1:30, 45 minutes today because already morning breakfast break also I gave. And 1:30 to 3, 1.5 hours we will have session, and thereafter we will wind up. Okay, done? Please concentrate. Payment process. So this payment process and returns chapter mainly for short note questions, MCQs, but in payment process there is one major amendment, that is interest. Interest computation is something which is definitely that can be tested for May 23 exam. In payment process there are two sections. Section 49, which talks about what are the various ledgers to be maintained by a registered, to be maintained by GST network on behalf of a registered person. That is section 49. Page number 161 you take. Then, so we have section 50, 49 and 50. 49 is what are the ledgers that will be maintained by GST network on behalf of registered person. Section 50 is interest computation. So interest on account of delay in payment of tax or wrong availment and utilization of ITC. First, so this e-ledgers, if you see, whenever a person is registered, so with respect to that registered person, GST network is required to maintain three ledgers: electronic liability ledger, electronic credit ledger, and electronic cash ledger. These are the three ledgers. Who will maintain these three ledgers? GST network on behalf of a registered person. What will electronic liability ledger contain? Electronic liability ledger contains 5 dues. TIPFO, TIPFO, T for tax dues, I interest, P penalty. Interest is on account of delay in payment of tax. P penalty is on account of non-compliance of certain provisions, offences that you commit. Then TIPF, fees. What is that fees? Late fees for delay in filing returns. Then O, others. So these are the 5 dues of a registered person that will be there in electronic liability ledger: tax, interest, penalty, fee, and others. Now, whatever balance that is there in electronic credit ledger cannot be used for payment of other dues. Only if can be used for payment of tax dues. So we cannot use electronic credit ledger for payment of interest, penalty, fee, and others. However, the balance in electronic cash ledger can be used for payment of tax dues as well as other dues. How money will come into electronic credit ledger? So whenever you avail ITC, it will come into electronic credit ledger. How you will avail ITC? GSTR 3B. Then ITC 1, availment of ITC on closing stock. ITC 2, transfer of business. On a transfer of business, ITC will be transferred. Then ITC 2A, single registration is getting split into multiple registrations. Then any refunds that we are getting, so like this there will be inflow into electronic credit ledger. The outflow of the electronic credit ledger is for payment of liability ledger. Same way, how money will come into electronic cash ledger? Whenever we make a deposit. So we will make a deposit into the cash ledger that way, or TDS, TCS deducted by the recipient. We have GST, TDS and TCS. So that will be deducted by the recipient. That will also be coming into our electronic cash ledger. Then any refunds granted by government also will come into electronic cash ledger. The outflow of electronic cash ledger is for payment of liability ledger. So credit ledger and cash ledger outflow is nothing but inflow to liability ledger, and we will use that liability ledger balance for payment of tax dues and other dues. Understood? Now, so these ledgers are with a prescribed formats. So electronic liability ledger is form GST PMT1. Form numbers you need to remember. PMT1 is what ledger? Electronic liability ledger. PMT2, electronic credit ledger. But cash ledger is PMT5. Electronic cash ledger is PMT5. Then we have PMT6, which is deposit challan. So PMT1 is liability ledger. PMT2 credit ledger. PMT5 cash ledger. 6 deposit challan. Okay. Then balance in electronic credit ledger or cash ledger after payment of interest, penalty, fee or any other amount may be refunded. So whatever balance that is there in credit ledger and cash ledger, we can get it as a refund. And any discrepancy in ledger is communicated through PMT4. That is another form. Say balances are not properly reflected in the ledger. So we need to complain to the portal. That complaint will be made in PMT4. Then special points with respect to cash ledger. We have some amendments in this. That is, what are the various modes of deposit into the cash ledger? Previously, we had net banking, then NEFT RTGS, then debit card, credit card, then over the counter payment, but over the counter you can deposit up to how much? 10,000 rupees in a tax period, in a month. But now they have added two more modes, that is UPI and IMPS. So using UPI and immediate payment system, so we can make the payment. So these are the two extra modes that we have now. So what are the 6 modes of deposit? Internet banking, debit card, credit card, NEFT, RTGS, over the counter payment. Over the counter payment limit is 10,000 for tax period. Then UPI, IMPS. Now, when the payment is debited in the bank account but not credited in the electronic cash ledger, sometimes it happens that whenever you make any purchase, so you swipe debit card, so you will get a message that money got debited, but there slip is not generated. So that person will say, sir, payment not received. Again you need to make. So again you will pay. If it is 500, 400 and all, okay. But tax payment and all will be in lakhs. So then again we cannot pay. For that reason, we need to file one form, that is PMT 7. Communication of payment gateway. Communication to the payment gateway that money got debited but not yet reflected. Now portal will ensure that they are collecting money from the payment gateway. That is PMT 7. Then for transfer of balances between major heads and minor heads in the cash ledger, form GST PMT 9 is notified. What is this? That is in the cash ledger, so we have 4 major heads: CGST, SGST or UTGST, then IGST and compensation cess. These are the 4 major heads, and we will have 5 minor heads: tax, interest, penalty, fee and others. TIPFO. Okay. Now there will be a 20 cell matrix. Now what you did is that you deposited under CGST tax and SGST tax 10,000. Okay. But actually you need to pay IGST. Now again no need to deposit into IGST. So you can shift the balances. So from this 10,000 CGST to IGST, we can shift the balances by filing PMT 9 form. Understood or not? Like this, only from tax to tax we can shift, or any cell to any cell we can shift. Any cell to any cell we can shift the balances. For that we need to file one form. What is that form? PMT 9. Then now they have launched a new form, PMT 9A. PMT 9A is for what? Say A Limited is a person. This A Limited is having registrations in 2 states, Tamil Nadu and Karnataka. So in Tamil Nadu, one registration is there, in Karnataka another registration is there. Now they can shift the balances from the electronic cash ledger in Tamil Nadu to electronic cash ledger in Karnataka. So between distinct persons, so Tamil Nadu registration and Karnataka registration is known as what? Distinct person. Between distinct persons, they can transfer the balances from electronic cash ledger to electronic cash ledger, any cell to any cell. Okay. For that, they have notified a new form. Balance available in electronic cash ledger can be transferred between distinct persons. And what is the form for this purpose? Form GST PMT 9A. Form GST PMT 9A. So these amendments can be tested in MCQs. Okay. Then special points on electronic credit ledger. So we have completed cash ledger. Now look into credit ledger. Refund from electronic credit ledger is possible only in 2 cases. Electronic cash ledger, it is your money, just like your bank account. Any time you can get the refund. But electronic credit ledger, refund is only 2 ways. Only 2 cases you will get refund. One is zero rated supplies. Zero rated supplies means what? Export of goods or services, supply of goods or services to SCZ. We saw 2 options. Option 1, option 2. In option 2, what we will do? We will not pay any GST, but we will get refund of ITC. That is only refund from the electronic credit ledger. Understood or not? And inverted tax structure. Inverted tax structure means my purchases are taxable at 18%. My sales is taxable at 5%. So now, in that case, the tax rate on outward supply is less than the tax rate on inward supply. So therefore, I will be getting refund. You understood? Because I have 18% ITC, but my liability is only 5%. Means there will be lot of accumulated credit that I can get as a refund. So tell me, when refund is possible from the credit ledger, only 2 cases. What are they? Inverted tax structure, zero rated supplies. What is inverted tax structure? Tax rate on outward supply is tax payable on outward supplier, tax rate on outward supplier. Tax rate, not tax payable. Tax rate on outward supply is less than the tax rate on inward supply. Then refund to the original source. What is this? So look into one illustration to understand this. So take page number 167. Take page number 167. For July 2021, GSTR 3B filed on 28/2021, where the gross liability reported is 200 lakhs. So how this 200 lakhs we paid? ITC 120 lakhs means cash 80 lakhs. So through electronic credit ledger, how much you paid? 120. Through cash ledger, how much you paid? 80 lakhs. Now in this 200 lakhs, we have some excess payment of tax by 1,50,000 and refund is granted. Now think logically, will this refund fully come into cash ledger? No. Because how you paid 200 lakhs? Partly from credit ledger, partly from cash ledger. Means this 150 lakhs also you would have paid partly from credit ledger, partly from cash ledger. So proportionately we need to get the refund. So you compute and tell me what is the ratio in which we paid. 120 is to 80. What is the ratio? 3 is to 2. 120 is to 80 pa. 3 is to 2 ratio. Correct or not? So now in this case, so 3/5 will go into credit ledger. 2/5 will go into cash ledger. Calculate 1,50,000 into 3/5. 90,000. So 90,000 will go into credit ledger and 40,000, 60,000. 60,000 will go into cash ledger. To give the credit into the credit ledger, they will be passing one form, that is PMT3. See this. Amount of refund 1,50,000 into credit ledger and cash ledger, into credit ledger 90,000, into cash ledger 60,000. But to give refund into credit ledger, they will be giving one form, that is PMT3. Now all forms we have seen. Now PMT1 is what? Liability ledger. PMT2 credit ledger. PMT3 refund into credit ledger. Then PMT4 communication of discrepancies, complaint. Okay. Then PMT5 cash ledger. PMT6 challan, deposit challan. PMT7 money got debited but not credited. You will complain to the payment gateway. Clear? Then 8 we don't have. 9 we have. What is 9? Transfer of balance between one cell to another cell. And 9A also we have. Transfer of balance between electronic cash ledger of one distinct person to another distinct person. All these forms I have given here as a summary. Various forms for payment process. Page number 164. PMT1 is what? 2, 3, 3A, 4, 5, 6, 7, 9. And then here there is one more form, PMT3A. What is this PMT3A? Again, that is also credit into electronic credit ledger, that is concentrate. I have claimed refund of ITC wrongly. Because I claimed refund of ITC wrongly, that much amount got reduced from the ledger. Now that wrongly claimed refund I paid back to the government. Now that money will go back into the credit ledger. So see that is upon refund to be credited to electronic credit ledger upon payment of erroneous refund of ITC. Erroneous means wrongly we claimed refund that we paid back. When we paid back, that will go back to the ledger. So that is this PMT 3A. So therefore you remember PMT 3 as well as 3A for what purpose? Recredit into the electronic credit ledger. Now come back. So that is this special points on electronic credit ledger. So take page number 162. So this first point we have seen. Second point is that refund to original source ledger, and this is that. So refund into the electronic credit ledger if you claim the refund wrongly. Okay. Then balance in electronic credit ledger can be used only for payment of tax, but cannot be used for payment of interest, penalty, fee and others. Can we use balance in credit ledger for payment of GST under RCM? RCM. No. For RCM we cannot use. Yesterday only we discussed. So first we have to use the credit for payment of FCM liability, and RCM liability should always be paid by cash. Then balance available in electronic credit ledger may be restricted for utilization by proper officer. Accordingly, we have section 38. So whatever balance, section 38 ko idku enna difference. Section 38 is restriction in GSTR 2B before availment itself. Is it clear? So before availment itself, if they restrict, that is section 38, restriction in GSTR 2B. Understood? Now we availed the ITC. After availing the ITC in electronic credit ledger, again it can be restricted under rule 86A and 86B. We have two rules. Rule 86A and rule 86B, like that we have two rules. So that we have below. Rule 86A and rule 86B, which is in page number 168 and 169. See that, page number 168, 169. But in the restriction is after availment of ITC, before availment of ITC. After availment of ITC. Before availment of ITC itself, restriction is where? Section 38. Now, 86A, you see. What does 86A says? Listen. Your supplier changed the address. They are not doing business in the place where they have obtained registration. Now, your ITC will be suspended for a period of 1 year. You understood? Your supplier is there, no? That supplier has changed the address. He did not communicate the change in address. Now you purchased from such a supplier. So your ITC will be suspended. You availed ITC already, but that will be suspended for a period of 1 year. Why, sir? Like that they created provision. Okay. So if your supplier is not in existence, or not doing business from the place where the supplier has obtained registration, or recipient is not in existence or not doing business from the place where they have obtained registration. If you are not doing business in the place where you have obtained registration, means you changed the address but you did not intimate, or you availed ITC without receipt of goods, or your supplier has not paid the tax, or the invoice or debit note is not in existence. These 5 cases, proper officer can disallow the credit for a maximum period of 1 year. Understood? What are the 5 cases, pa? Sir, these cases are similar to section 38, sir. 38 also, if they are not filing GSTR 3B like that, it is there. But that's why I gave you a difference first. 38 is before availing ITC. And this 86A is after availing the ITC. But this ITC, you know, how much it is suffering? Because according to me, this input tax credit is like, you know, this Karna, like that one hero is there in Mahabharata, you know. So like that, pa. As soon as he born, his mother left him. And thereafter, everyone insulted him with his caste. And then he learned many things. But his guru has cursed him that he should forget everything in the time when he required. And thereafter, so this Bhumata has cursed him that your chariot will go into the earth. That is in the war whenever it happens. Because you did not allow me to peacefully enjoy my food which was fallen on the ground. So like that everywhere. And so Indra came and took away the shield what Karna is having. After all those things, Karna went into the battle. And after in the battle, because of Krishna, Karna died. Okay. So because of Arjuna, Karna did not die. Because of Krishna only, Karna died. That is, like the input tax credit, first you should have got invoice. You should have received the goods and it should be matching. And thereafter in 38 it is not restricted. We can take a sir? Yes. But even then, see, like how Krishna is killing Karna, like that, in 86A, whatever money that comes in my ledger also, that will also be suspended. Sir, it is my money, sir. Actually, it is my money. I paid it to my supplier. Okay. And what are the cases? What are the 5 cases where they will dissolve the ITC? ITC, supplier, not in existence or not doing business from the place where they have obtained registration. Next, recipient not in existence or not doing business from the place where they have obtained registration. Next, no invoice. Then not received goods. Then supplier did not pay tax. These 5 cases, our ITC, which is already availed in ledger, will be suspended for a period of 1 year. And what will happen after 1 year? After 1 year, if it is a genuine credit, we can adjust with the liability. Otherwise, that credit will be disallowed permanently. If it is not genuine, then it will be disallowed permanently. If it is a genuine credit, we can set off with the liability. Then 86B. What is this 86B? Payment of 1% of the liability through cash ledger. What happened during COVID time? So many people were not having that much of sales because in COVID time we were clapping, lighting candle, etc. and all. We were not doing business actually. Okay. So everyone was sitting at home and plate, tumbler and all, they used to come and hit outside. Crazy people here. So 1% don't have any other work. He will come in the news channel and he will tell, Mitron, you clap. Our idiots will clap. Why we should clap? So, no. So, at that time only I thought, super. In India, we can become anything. Okay. So, therefore, this rule 86B, why it came? Because COVID, completely all the businesses got shut down. Then slowly they asked them to work on a limited time, morning 9 to 11 or evening this time only, like that they gave. I have lot of purchases, means I have lot of ITC, but my sales is small. When my sales is small, my liability also small. Then definitely I will be using my credit for payment of my liability. Then money will not be paid to government. Now, for government, there is a cash crunch. What happened, government? So, in this scheme, that scheme, like that, fully they have spent money. So, thereafter, government is not having cash inflow because they made a mistake that before COVID only, one big statue was constructed in Gujarat. You understood? Crores and crores were spent. Thereafter, for COVID, if they say no money like that, then it will not be proper. So what they did, full reserve they have spent. So otherwise everyone will blame, who asked you to construct statue like that? So therefore they spent money. Then they started asking, 1%, 1% of your liability, you pay through cash ledger, like that. So this scheme has been brought. But after COVID also, still this rule is continued. You understood? For that, we need to say thanks to Chechi. Okay. So this, see this. To whom this 86B is applicable? To whom this 86B is applicable? Turnover in a month exceeds 50 lakhs. And while computing the turnover, we should take out exempted supplies. We should take out zero rated supplies. Exempted includes non-taxable. This is simple taxable turnover and correct? Because we have only 4 supplies. Taxable, exempted, non-taxable, zero rated. Zero rated should be taken out. Non-taxable should be taken out. Exempted should be taken out. Then what is left? Directly they can give. So you remember when this rule 86B will be applicable? Whenever taxable turnover in a month exceeds 50 lakhs. They have to pay 1% of the gross liability through cash ledger, even if they have sufficient balance in the electronic credit ledger to pay. Okay. And to whom this is not applicable? For example, say this, I have sufficient balance in credit ledger. Already I discussed this with you. So my liability is say, so 18 lakhs, my liability is 18 lakhs. Definitely my turnover would have exceeded 50 lakhs. And I have electronic credit ledger, so 20 lakhs. Then how much I can pay using credit ledger? 1% through cash ledger. So through electronic credit ledger, I can use only 99%. 99% means 18 lakhs into 99% is what? 17 lakhs 82,000. Then 18,000 I have to pay through electronic cash ledger. Then that balance will be still there in electronic credit ledger. Yes. So what is the balance in electronic credit ledger? 2,18,000. It will be there in electronic credit ledger that can be carried forward. To whom this is not applicable? Not applicable to government and its family members, because they need cash inflow. What is the point in collecting from one pocket to another pocket? It is of no use. So therefore, for these 4 people, who are the government and family members? Government department, public sector undertaking, local authority, statutory body. For them it is not applicable, 86B. Also, if you have paid already more than income tax of more than 1 lakh in the last 2 years, that is, you paid already income tax more than 1 lakh in the last 2 years, means you are already paying income tax, cash you are giving, so therefore fine. So you are a good person, so no need to pay 86B, because already you created a cash inflow to the government. You understood or not? Paid income tax greater than how much? 1 lakh in each of the preceding 2 years. Then received a refund of ITC greater than 1 lakh in the preceding financial year. That is, you have got, you are eligible for a refund of ITC more than 1 lakh in the preceding year. That refund they have not yet released. They have sanctioned, not yet released, which means your money is with them. Again, if they ask, pay 1%, you will take stone and hit them, correct or not? Because your money is already with them. That's the reason why whenever you are eligible for a refund of more than 1 lakh in the preceding year, then also 86B is not applicable. Or third one, you already paid more than 1% cumulatively in the current financial year. For example, in the current financial year, you paid up to July 3 lakhs. Out of the total liability of 50 lakhs. So 3 lakhs divided by 50 lakhs is what? You already paid 3 lakhs through cash ledger out of 50 lakhs. 6% means already you paid more than 1%. Now July month you don't have to pay anything through cash ledger. Is it clear? So paid greater than 1% of the total output tax liability through cash ledger, calculated cumulatively up to the month in the current financial year. And one more point, concentrate. Sir, GST paid under RCM, I have to pay through cash ledger. Will that be counted for 1%? No. That anyhow you have to pay through cash ledger. This is which liability? FCM liability. RCM liability you have to pay by cash only. So FCM liability only 1% you have to pay through cash ledger. That's why clearly I have given total output tax liability. RCM liability is what? Inward supply liability. Understood by 86A and 86B. Now have a look into this illustration 2 and 3 related to 86B. Illustration 2. Messrs. ABC Limited has engaged in manufacture of LED lights and made turnover of 5 crores in the previous financial year. And that is irrelevant. Sale of LED lights 60 lakhs. What is the taxable turnover? More than 50 lakhs in a month. Correct? So the month or year? Monthly turnover should be more than 50 lakhs. So here sale of LED lights, taxable supply 60 lakhs. More than 50 lakhs. And interest on deposit 2 lakhs exempted. Export without payment of tax 1 lakh 0 rated. That we will not take. Only taxable supplies. On this taxable supplies, what is the GST payable? 12%. Then how much we have to pay through cash ledger? Please calculate. 60 lakhs into 12%. What is the tax liability? 7 lakh 20 into 1%. So 7,200 you have to pay through cash ledger. Then next illustration you see, that is April month you have a gross liability of 13 lakhs and balance in credit ledger is 12 lakhs. So therefore you have to pay how much through cash ledger? 1 lakh. Now so far for April month, how much you paid through cash ledger? 1 lakh divided by total liability 13 lakhs. 1 divided by 13, how much? 7.69%. Okay. Here you don't have that much balance in credit ledger, so you have to pay by cash ledger. Then May month you see. May month 14 lakhs is your liability. Every month your turnover crossed 50 lakhs. Okay. May month total liability 14. You have that much of credit in the credit ledger. Now already you paid more than 1%. How more than 1%? Please calculate. So far up to May, how much you paid through cash ledger? 1 lakh. Divided by total liability, including May month also. Please see. What is the total liability including May month? 13 plus 14? 27. 1 divided by 27 is how much? 3.7. Is it more than 1? So, for May month, we don't have to pay anything through cash ledger. Sir, are you getting this, sir? Why you don't have to pay anything through cash ledger? Because you are maintaining that 1%. Is it clear? Again, I am repeating for May month, listen. For May month, up to May month, how much you already paid through cash ledger? Already paid through cash ledger, 1. Divided by, what is the total liability including May month? 27. So 1 divided by 27 is more than 1%. Means already you paid more than 1%. Correct. So for May month you don't have to pay anything through cash ledger. Understood or not? Then again June month you take. June month you have enough balance in the credit ledger. Now up to June month already how much you paid through cash ledger? 1 lakh. Divided by, take the total liability. So 13 plus 14 plus 15, 42. So 1 divided by 42 is how much? So more than 1%. So for June month also you don't have to pay 1% through cash ledger. Understood or not? Like that you need to see. So first what you need to check? So far how much we paid through cash ledger divided by total liability. If it is greater than 1% or equal to 1%, for that month don't pay anything through cash ledger. If it is less than 1%, for that month you have to pay 1% through cash ledger. For example, you take October month. You see October month. October month 50 lakhs is liability and 50 lakhs is there in the credit ledger. Up to October month, how much you paid through cash ledger? 1 lakh plus 1 lakh, 2 lakhs. 2 lakhs divided by, up to October you total the liability. So 201 lakhs total up to October. 13 plus 14 plus 15 plus 28 plus 28 plus 53 plus 50, 201 lakhs. 2 divided by 201 is equal to or greater than 1%, less than 1%, less than 1%. So October you have to pay 1% through cash ledger. What is the liability? 50 lakhs. 50 lakhs into 1%, 0.5 lakhs you have to pay through cash ledger. Is it clear? So that is with respect to this 86B. So we have seen rule 86A and rule 86B. That is for the purpose of restriction. So GST officer can restrict the utilization of ITC. Then come back to page number 163. See this, transfer of input tax credit. This already I told you while discussing IGST settlement. When we use CGST credit for payment of, IGST credit for payment of SGST liability, central government has to transfer that money to state government. Same way SGST credit used for payment of IGST, state government has to transfer that money to central government. That is this, okay. Then next, page number 166. Taxpayers should settle their liabilities in the following order. First, they need to pay self-assessed tax pertaining to previous period. That is, last month liability we need to pay first. Then this month liability. Okay. Then any amount which the department has identified us to pay. Okay. Last month whatever we reported in GSTR1, that we need to pay first. Then current month what we reported in GSTR1, that we need to pay. Thereafter department will order us to pay some amount. Maybe we would have evaded in some past period. So that we need to pay third. Any other amount payable under the Act on account of demand notice or proceedings. Then to initiate payment, taxpayers will generate a challan online using PMT6. That PMT6 challan will be valid for a period of 15 days. Means within 15 days we need to make the payment. And these are the modes of payment. And with respect to over the counter payment, we have restriction. How much we can deposit over the counter? 10,000. But in 3 cases, that 10,000 restriction is not there. Any amount can be deposited as cash in the ledger. What is that? In case when officer is recovering the due from us, when officer is recovering the due from us by selling our assets, he may get a cash. That cash can be deposited into electronic cash ledger. Or officer is conducting search or raid in our place and he identified some unexplained cash. So he came to our place, black money he identified, that black money also he can take and deposit it into the cash ledger towards the tax dues. Or government department, for example IRCTC, Indian Railways is a government department. When they need to pay tax, they can also pay tax in the form of cash beyond 10,000 rupees. What are the 3 cases? The money can be deposited into electronic cash ledger beyond 10,000 rupees in the form of cash. What are the 3 cases? Officer recovering the tax dues, or officer conducting the search or investigation and collecting cash, or government department. Then, so refund to the original source already we discussed. So 86A and 86B we have completed. And we will take a break and thereafter we will see section 50, interest on account of delay in payment of tax. What we have completed in payment process so far is section 49, read with 2 rules, 86A and 86B. We will meet at 1:30, okay?